And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where's the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman. What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
activity is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in the laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice. Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It it is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. This is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing
In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube-sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. Design the unit so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It's Tuesday, February 16, 2021. We're back after the long holiday weekend. And man, what a Tuesday.
It is, you know, it's I always get a little confused on days like this because it
Where
should
am I?
be
Who
Monday.
am I? Where am I?
Yeah, what a week.
I know. Get ready. It's already Tuesday. Tomorrow's Wednesday. We've got the new energy crisis to talk about. That is really front and center. We've got the alternative food creators. We're going to check in with the folks over at Impossible Foods. And we've got the Robin Hood Hideout. We love this story.
Yeah, it's an exciting one by our own Annie Massa.
Yeah, totally. And then we're going to talk about Goldman Sachs going after the little guys, the small investor. We're going to get to all of that over the next few hours. First up, though, let's get you going on this Tuesday with a check on the trading day. Here's Charlie Pellet.
And I thank you very much. And here's what's going on. We have got the Dow Jones Industrial Average trading at a record. The S&P retreating from a record. Now, little changed. It's been that kind of a day with U.S. stocks swinging between gains and losses. And NASDAQ retreating further from a record, down 53 now, a drop there of 0.4%. So again, the S&P is down by 1 point, little changed. The Dow up 72. That is a record up by 0.2%. 10-year yield now 1.28%. Gold is down 1.2%, $17.96 the ounce. West Texas Intermediate crude up 0.8%, $59.92 a barrel. Natural gas surging 7.7% today. Nat gas now at $3.13 per million BTUs. Again, recapping, stock stocks, little change, lower on the S&P, down now by half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. It is time now for the Market Drivers Report. All right, let's bring in Bloomberg Stocks editor Dave Wilson, tracking the trade on this Tuesday. Feel like in some ways, Dave, if you kind of ignore some of the outliers, it's a continuation of the trade we got last week.
Well, it is to a large extent, simply because if you're looking for direction, you really have to focus on individual stocks because you're not finding it in the likes of the S&P 500. Now, if you go through the companies in the index, you see the travel stocks doing relatively well, the cruise line specifically, Carnival, Royal Caribbean, Norwegian, all among the day's 5 best performers in the S&P 500. And then on the other side, some earnings that didn't go over so well. CVS Health, notably, down 4.9% in the wake of their results. I mean, even though the fourth quarter numbers were better than analysts expected based on the average estimates in a Bloomberg survey, nothing really new there in the sense that we've seen, more than 80% of companies in the S&P 500 surpassing projections for the third straight quarter, and more often than not, their shares fall after the results. So what's going on with CVS certainly has a lot of parallels in this earnings period.
Okay, oil rising above $60 a barrel for the first time. Energy stocks leading the pack in the S&P 500, higher by 2%. Financials, though, not far behind. Take us into it.
Well, I mean, you've seen the energy stocks do relatively well as oil has moved up, and today is sort of a continuation of that. I mean, with the financial companies, you really have to focus on what's going on with bond yields. When you look at the yields on 10-year treasuries rising the way that they have, it gets your attention, and it means that there's more potential profit for banks, in terms of their securities holdings, what they stand to earn on their loans. I mean, just however you look at it, it's definitely a plus for a whole lot of companies, which have really struggled with the fact that yields have been so low, and so therefore rates have had to go with them. So you can understand why they're doing relatively well too.
You know what's not struggling? Bitcoin hitting 50,000, going above it. It's now up roughly 67% this year, Tim.
Wow.
Wow, is right.
It's only mid-February.
It's still early. Dave, I don't know. How does this factor into the overall trade?
Well, I would take a step back and say that it's really more of a manifestation of a speculative fervor that has really left its mark on stocks as well as cryptocurrencies, other types of investments. I mean, you see it in the bond market where, the yields on high-yield debt have come down to the lowest levels on record. So that's definitely part of it. And then when you look at shares, we'll be talking next hour about my chart of the day, where you've got to look at the micro-cap stocks for the biggest gains this year. And, they're doing far better as a group than those in the Russell 2000. I mean, you haven't seen anything like what's been going on this year if you go back through the 15-year history of the Russell Microcap Index. So, it's sort of consistent across markets. People are taking risk, and, it's showing up in a lot of ways.
So how is that manifesting in the bond market today?
Well, as far as today goes, I mean, you see the move away from treasuries. Certainly that's showing up. Just looking at where the 10-year yield is at this point, 1.29%. You haven't seen a yield like that in a while, for sure. And, at the same time, I mean, you focus on what's going on in the corporate bond market, and, people have been chasing yield there, I mean, to an extent that you haven't seen. Again, if you look at the high yield area, and certainly it shows up in investment-grade corporate bonds as well. So, it's just kind of a different complexion, you might say, to what's going on in the markets at this point.
Well, that reflation trade, Treasury yields at a one-year high. The other thing that caught my attention, I don't know if the two of you noticed this, SPAC story, and it talked about Waiter Inc. Never had the resources of Grubhub and Uber Eats and some others, but nonetheless, It went public through a merger with blank check firm Lancadia Holdings. And if you remember, they had Tillman Fertitta behind it. They also had the CEO of Jefferies Financial. They raised a bunch of money, but not necessarily doing so well. Its shares plummeting, losing about 96% of its market value. And I do wonder if we're starting to see kind of the separation between SPACs maybe with some legs and some real businesses behind it versus those that were just chasing money, Tim.
Yeah, that's the big question. I mean, SPACs have been all the rage. It was like 2020 was the year of the SPAC, but it's already shaping up to look like 2021 is looking just the same. Dave, what do you think?
That's another manifestation of the risk we're talking about here. People willing to throw money at companies and just hope that whoever runs them can come up with a deal that works. I mean, you're seeing a lot of the transactions that are happening involved in, sort of more modern industries, you might say. Think electric vehicles as an example. And, if you think about that area particularly, there are going to be winners and losers down the line. It happens in every industry. It's really a matter of, which companies are going to make it. And, the fact that they're brought public by SPACs, it just kind of compounds the risk for investors that put their money into them.
In 2020, 248 SPACs went public on U.S. exchanges. They raised more than $83 billion this year, on pace to set a new record, with 143 SPACs raising more than $44 billion in IPOs. That's as of February 12th. So we're not even close to being done.
That's astonishing.
It is really. It's blow-away numbers. Dave Wilson, thank you so much. Dave will be back a little bit later on with his chart and stock of the day. Let's talk about the rest of the show because we've got the new energy crisis. You guys were talking about it earlier on Quick Take.
Yeah, this was like our entire top of the show for 9 a.m. It was it's shocking to see over the weekend this type of extreme weather and the way that it has taken a hold on the energy grid in so much of the U.S. I mean, the focus has been on Texas, certainly. Rachel Adams-Hurd joined us live from Houston. She stood out in the cold for us, gave us an update. I mean, a third of the state without power.
Listen, I have a bunch of relatives in Texas, in Austin. I've got family on a generator. I've got folks in Austin, in Houston that do have power. Others in other parts of the states that are dealing with the rolling blackouts. An hour on and an hour off, basically. And so, just kind of navigating their way through. So we're going to dig into that. We've also got the president of Impossible Foods. He is with us, and then we're going to get to the most, or among the most read. It has to do with Robinhood, the CEO hiding out in hotel rooms.
I know, Annie Massa with the just a fantastic profile of Robinhood CEO Vlad Tenev.
It's a really good story. All right, let's do the Bloomberg Business Week Bite of the Day. Tim, one number that tells us a lot. Today's number, $300 million.
Startup Freshworks surpassed $300 million in annual subscription revenue, placing the provider of customer relationship management software on track toward a potential stock market listing. The Silicon Valley startup boosted revenue about 40% last year as the pandemic prompted businesses to bolster their digital capabilities. Customers in healthcare, education, and government contributed to the increase.
All right, good to know. Let's also find out what we need to know when it comes to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, thanks. President Biden will be pushing his stimulus package during a town hall later today in Milwaukee, hosted by CNN. The head of the National Economic Advisors under President Obama, Austin Goolsbee, tells Bloomberg there is an argument for injecting more stimulus and doing it quickly.
The pandemic is fundamentally different from other business cycles, and let's wait and see how it goes is the worst strategy you can have when there's a pandemic. We have multiple times seen on both the health side and the economic side that wait and see, as I say, is just preparing to fail.
Biden is pushing his plan against a ticking clock. The last round of stimulus passed by Congress is set to expire March 14th. The World Health Organization says it's seeing a parallel pandemic affecting people's mental health. A recent survey found adults in the U.S. are experiencing the highest stress levels since April, and 84% say they're feeling at least one emotion associated with prolonged stress, like anxiety, sadness, anger. Psychiatrist Dr. Sue Varma spoke with CBS This Morning.
If you can look at over the last 2 weeks to 1 month, how has your mood been? Has your mood been lower than usual? Are you experiencing more anxiety than usual? Are you having trouble sleeping? And are you having morbid thoughts that life is not worth living? The hopelessness and the pessimism, that's one thing that I see setting in people the longer that this goes on.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And this story on the Bloomberg about New York City's vaccines just proportionately going to wealthier neighborhoods in Manhattan and Staten Island, at least according to some data that was released today, Tim.
Yeah, the disparities highlight the inequities of a vaccine drive that has already been criticized for what New York Mayor Bill de Blasio called, quote, profound racial disparities. So here's some of the data. White residents composed almost half of the people who'd gotten at least one dose, despite being only a third of the population. Also, more than a quarter of those getting the COVID-19 vaccine are non-residents, who tend to be younger and are more likely to be white than those living in the city.
Right, and we know New York City has been prioritizing their healthcare workers, the elderly, essential workers for immunizations, and officials have pledged to carry out, the country's most equitable vaccine rollout. And I think, as we go through this, it's not going to be a perfect system. But I do think we need to make sure we do prioritize and make it equal.
Yeah, and I think the more data that come out, the more alarming what we learn is. I think there's a lot at play here.
Yeah, I do too.
One of those things, I think, too, has to do with the idea of who can actually get to a vaccine appointment, who has the access to, on a computer, to actually make an appointment.
Right.
Who has the time to take half a day or however long it takes
Or get up
to
in the middle of the
go,
night.
or get up in the middle of the night or drop whatever they are doing to be able to say, okay, wait, there's an appointment available now. I can drop what I'm doing. I can go do that.
I will also say that in having conversations with a lot of individuals from all types of races, black and white, that there are people who say, I'm going to wait before I take the vaccine. We've certainly heard that from some of our guests when it comes to some of the minority communities that are maybe just holding back, and we understand there's history in terms of the medical community and racism over the past. But I do wonder, too, how much are people holding back from going after a vaccine?
It's not just a New York City problem.
No.
It's happening in many communities throughout the country, and it's something that government officials and local and state officials have to do a better job in if we do want to reach that herd immunity number.
Yeah, exactly. And it's kind of, when you think about a day where we see cases and numbers are coming down, and a lot of people are pointing to those vaccines. This is Bloomberg.
Sports, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P back at a record right now, up 2 points to 39.37, a gain of about 0.1%. Stocks climbing to highs as optimism over the economic recovery continues to ripple through markets worldwide. Global bonds extended the worst start to a year since 2013. 10-year down 24.30 seconds, 10-year yield now at 1.28%. The S&P up 2 points, higher by 0.1%. That will be a record close. We have got the Dow Jones Industrial Average up 100 points, up 0.3. NASDAQ retreating from a record, down 31 now, a drop there of 0.2%. Gold is down 1.3%, lower by $23 the ounce at $17.95. West Texas Intermediate crude up 0.9%, $59.99 a barrel. Just getting word from Occidental Petroleum that it has declared a force majeure as cold shuts in the Permian well. Again, West Texas Intermediate crude up 0.9%. Occidental, by the way, does report today after the closing bell. Cannot ignore natural gas today, surging 7.7%. Nat gas at $3.13 per million BTUs. Bottom line, U.S. stocks at a record. S&P up 2, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, that is certainly one of the big stories, that energy sector and the impact of the weather across Texas and other states. We're going to get to that in just a moment. Right now, we want to get to one of the other stories that we are following on this Tuesday, and this has to do with, of course, the virus. President Biden saying in a tweet the U.S. would exceed his goal of administering 100 million vaccine doses in his first 100 days in office. Tim, also, we saw U.S. cases and hospitalizations dropping dramatically, suggesting that measures to interrupt transmission, they are working, at least for now. Fingers crossed.
Yeah, for now, fingers crossed. The big question is, are we sort of out of the woods at this point from the latest peak? That's something I've been thinking about a lot.
Yeah, and a lot of people saying it could be another rough 12 to 14 weeks because of variants. Let's check in with Dr. Peter Alpern, VP over at Doximity. It's a professional medical network for physicians. He joins us on the phone in San Francisco. That's where he has a private practice. Dr. Alpern, good to have you here with Tim and myself. How are you? What are you seeing in terms of the number and severity of cases as well as the rollout of vaccines?
Nice to be on the show. Thank you so much. Yeah, in San Francisco, we are seeing a decrease in general. So a decrease in the number of hospitalizations and also, importantly, improved ICU capacity, as well as the death rates from COVID starting to decrease. But of course, death from the illness is a lagging indicator. So that's something that does take, several weeks to sort of start to come down after we see the number of patients being admitted come down. In terms of vaccinations, we had set up many vaccine sites here in San Francisco and in the Bay Area, but like most of the country, we are also prisoners to the amount of vaccine that's made available to us. And so just recently, San Francisco's had to temporarily pause on vaccinating the citizens of the city and county simply because of a lack of vaccine.
So here we are at the where daily levels are basically at their lowest levels in months. Doctor, does this have to do with vaccine? Does it have to do with the fact that we're weeks after a holiday and the post-holiday bump that happened is now going down? Why are we seeing the decline here? All of the above?
Yeah, exactly. It really is an all of the above situation. So obviously, as people have the gatherings of around Thanksgiving and Christmas have sort of wound their way through the system, and people were pretty good about not trying to get together for the Super Bowl, we seem to have experienced sort of the decline that we expected. And absolutely, vaccinations are having an effect. If you really think about what vaccination does, it's really about reducing that really severe illness and making it so that people who do catch catch coronavirus and leading to COVID will end up having more of a flu-like illness, but will not have those extremely severe reactions, which of course can ultimately and unfortunately lead to death.
What are you thinking as far as timeline for when we will see widespread inoculation, given that the Biden administration made this announcement today and that, despite early speed bumps, it seems to be like we are on a relatively good trajectory here?
Yeah, so that's a great question. On Doximity, what we're seeing is, we have the advantage of being able to see the conversations among hundreds of thousands of physicians. And what we're seeing is a general belief that with the new vaccines coming online, with AstraZeneca and some of the other producers bringing on supply of vaccine, that we should be able to make a dent over the next several weeks to months with just an increase in supply. So that's the hope. But as they say, vaccines don't prevent illness, vaccination does. And so it is going to still be incumbent on all those local jurisdictions and health plans and insurance companies and everybody pitching in to be able to get those vaccines in everybody's arms.
Dr. Alperin, are you in favor of dose stretching policies, so stretching out the interval between the first and second doses?
Yeah, so there's been a lot of discussion around that. That's not something that I'm absolutely an expert on. I believe I follow what's being broadcast and written down by the CDC. Mm-hmm. And at this point, that is not something that sits in favor. And I know that there's a lot of experts in vaccines who are having a very robust discussion about this. And really, from my position as a person who is delivering care, what I would basically do is just really follow their guidance.
What about schools and opening schools?
Yeah, opening schools is obviously on the forefront of everybody's mind and every parent's mind. What we really need to do for schools is get our teachers vaccinated, and I know that a lot of places are doing that as well. I know there is a lot of data to suggest that bringing kids back to schools is actually very, a lot safer than people may think. But I do know that, getting teachers and other school personnel vaccinated is really the key to that whole process.
I want to just end talking a little bit about variants here. How concerned are you about the spread of mutations variants that we've seen already exist here in the United States?
So I think the variant is situated. The issue with variants is interesting. So most of the variants that we've seen don't seem to show an increased virulence or severity. What they show is an increased ability to cause contagion. And so I think all the studies so far that have been done on the existing vaccines show that these existing vaccines are effective.
Right.
But I think that we're going to have to wait and see. Obviously, This is very new to everybody else as well. I do know that patients are concerned, and I do know that patients are asking all about these kinds of things.
Right.
And I think what they need to do is to try to interact with their physicians by any means necessary.
Right.
Make an appointment or get a telehealth appointment.
Got it. Got to run. Dr. Peter Alperin, Vice President Doximity, on the phone from San Francisco. You're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And we just mentioned, or earlier Charlie did, that headline about Occidental declaring a force majeure as the cold shuts in the Permian and the oil industry there. So big deal, big news. We're going to dig into that, Tim.
Yeah, we will. We're going to be joined by Bloomberg News weather reporter Brian K. Sullivan in just a few minutes.
All right, let's get back, though, to your top business stories. Another check on that trading day. Here is Charlie Pellet.
Hi, thank you very much. Let's begin with energy, and here's what's going on. Natural gas surging 7.5% right now, $3.13 per million BTUs. West Texas Intermediate crude back above $60.14 a barrel on WTI, up right now by 1.1%. Brent crude, the global benchmark, to put it all in context right now, 63.46. And of course, we will have more on the hydrocarbon story coming up for you in just a moment right here on Bloomberg Business Week. U.S. stocks trading at records. The S&P up 5 now to 39.39, up by 0.1% as optimism over the economic recovery continues to ripple through markets worldwide. Well, we've got the Dow Jones Industrial Average up 113. That too is a record now, up by 0.4%. In the early going today, we had NASDAQ at a record. NASDAQ is down now by 23 points, a drop of 0.2%. 10-year yield 1.29% right now on the 10-year, down 24.30 seconds. Gold down $24 the ounce, down 1.4%, $17.94. Do want to pass along a headline out of California in terms of what they're doing with COVID. The positivity rate now down to 3.5%. It was 11.4% 1 month ago. The Department of Health and Human Services says more than 10% of hospital beds in American hospitals were occupied by COVID-19 patients on February 13th, the least since November 10th. The hospitalization rate fell to 10.2% from 10.4% the day before. But what is the best metric to measure the spread of COVID? That question this morning for Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security.
The hospitalizations, that's something that is sort of binary. Either you're in the hospital or you're not. This is a number that's well tracked. It doesn't depend upon testing levels. It doesn't depend upon any kind of adjudication. So when you look at hospitalizations, I do think we're in a better place. The question is this sustainable?
Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares, they are down right now by 0.1%. BioNTech down 2.8%. AstraZeneca lower now by 1.7%. Moderna is down 2.7%. Johnson & Johnson shares, they're down by 0.7%. Recapping, S&P at a record up 0.1%. Natural gas surging 6.9%. West Texas Intermediate up 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate it. So, no doubt about it, Tim, a top story on this Tuesday, the energy crisis crippling power grids across the U.S., and we're seeing blackouts, leaving about 5 million customers without electricity. It's all because of unprecedented cold weather across Texas and other states that are normally pretty warm this time of year.
And get this, there are global links to this.
Mm-hmm.
Brian K. Sullivan is Bloomberg News weather reporter, and he joins us now on the phone from Boston. Brian, let's start out with just the big question, right? Like, how did this happen, weather-wise? Why is it so cold in so many parts of the country that don't usually see temperatures like this?
So during the first week of January, there was a burst of warm air over the North Pole, and that may sound a bit of a paradox, but warm air will come in over the North Pole, and what this does is it displaces the colder air up there. You have the polar vortex, which is like a girdle of wind that keeps the cold in the North Pole. This warm air will weaken that, and it allows the cold to spill out. So this has been weeks in the making, but it finally got here at the end of last week, and it's really dug in now.
All right. So that on top of how come the power grid couldn't deal with it?
Well, that's good. That's a good question, and that's one of the things that a lot of people are looking into. And part of it is that
the cold was just so severe when it got into Texas. A lot of these places just aren't equipped. The infrastructure isn't equipped to deal with such bitter cold. In the north or the northern Great Plains, for instance, they're used to seeing temperatures go down to single digits and whatnot. But in Texas now, you have equipment failing, and it just turned into a cascade.
So is there a climate change connection here? Is it too early to tell?
It's more a question of too early to tell. I mean, there are people who study the Arctic, and they've been studying the warming up there, the fact that there's a lack of sea ice, and, for instance, Judah Cohen at AER, and he says that there's definitely a climate change connection here. Other scientists want to look at it longer, want to take more studies before they make a commitment.
Hey, Brian, one thing I want to ask you about is the Texas Railroad Commission, Jim Wright, or commissioner, he told Bloomberg TV that renewable energy sources such as wind turbines are diverting resources away from reliable fossil fuel sources like natural gas. So I want to ask you, you study this, is alternative energy sources partly to blame?
We have a story on the system right now by our colleagues, and that wasn't the conclusion I drew after reading the story. Was that I didn't really see that in their reporting, so I wouldn't want to comment on that further.
Is it more that the power grid problems and limitations and aging of, which is not a new story, Brian? You know this well. Is it just? I mean, we've been talking about this for years, for decades.
Right. Well, I mean, it's not just Texas either. I mean, remember over the summer where it was extreme temperatures in the other direction, hot weather that caused all these problems in California where they had issues. And there have been other issues in the Northeast as well. I believe Long Island a few years ago had some severe issues after some severe weather events. So I think, we're seeing the chickens are coming home to roost, I guess, is what I would say.
Hey, Brian, what needs to happen with the grid, with infrastructure in California, in Texas, and other parts of the country to make sure that this type of thing doesn't keep happening?
The scientists tell me we have to accept the fact that we live in a changing climate and a changing world, and we have to prepare for it. Insurers tell me this as well. I talk to a lot of different insurance companies, and they're always saying the same thing. The world is changing, and it's changing at a very fast rate, and we have to prepare for it. Every insurer I ever talk to, they say prepare, 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 prepare. And, none of them dispute climate change. They say that it's coming, it's here, it's now, and it's a problem.
It's why really climate change for such a long time, people are like, well, it's, not a financial story. It's not an economic story. And yes, it is. And we have definitely seen it, Brian, just quickly over the last few years, how much so it is.
Oh, I totally agree with you. I mean, I think the climate change is a financial story, and to look at it from any differently is the wrong conclusion to take.
All right.
Because it's going to affect the banks and everyone else.
Totally. All right, Brian, thank you so much. Really appreciate your reporting. Brian K. Sullivan of Bloomberg News joining us on the phone from Boston. Let's get back to world and national news. Over to Nancy Lyons in D.C. Hi, Nance.
Hey, Carol. The Democratic chair of the House Homeland Security Committee, Benny Thompson, is filing a lawsuit against Donald Trump for inciting the deadly insurrection at the U.S. Capitol. And the attorney for Thompson, Joe Sellers, says Trump, his attorney Rudy Giuliani, as well as the Proud Boys and Oath Keepers also tried to interfere with the election.
They collectively moved to take over the Capitol and attempt to slow down or stop the Congress from ratifying the election results.
The lawsuit is part of an expected wave of litigation over the January 6th riot, and it's believed to be the first one filed by a member of Congress. It seeks unspecified punitive and compensatory damages. Well, the White House says states can expect a slight boost in coronavirus vaccine supply as manufacturers continue to scale up production. White House Press Secretary Jen Psaki.
We're increasing the vaccine supply to 13.5 million doses per week that will go out to states.
She says that's a 57% increase since Joe Biden's inauguration. Well, some good news for coffee drinkers. 3 new heart studies, including the well-known Framingham Heart Study, show that drinking more caffeinated coffee can actually reduce the risk of heart failure. Researchers studied more than 21,000 people over a 10-year period. They found those who drank at least 1 cup of coffee a day decreased their heart risk by 5 to 12% per cup of coffee. Heart experts say they're not ready to recommend drinking more coffee to improve heart health, but they do suggest that losing weight and giving up smoking can reduce heart disease. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week on this Tuesday. Carol Master along with Tim Stenovic in our Interactive Brokers studio. This story, it is our most read story on the Bloomberg in the past 8 hours. Has to do with Citigroup. We've talked about this story a bunch over the last year or so, and it basically, cut to the chase here, unexpectedly losing a legal battle to get back $500 million that it sent to Revlon lenders. It was an embarrassing blunder by Citigroup, which forced it ultimately to answer to regulators and tighten its internal controls. Basically, they sent this money out, right, and were like, oops, a mistake.
Oh, my goodness.
And now the courts are basically saying you don't. The
500
lenders don't have to give it back.
$500 million mistake. U.S. District Judge on Tuesday ruled that 10 asset managers for the lenders, this includes asset managers such as Brigade Capital Management, HPS Investment Partners, Symphony Asset Management, do not have to return the more than $500 million that Citibank said it mistakenly transferred in August while trying to make an interest payment. The judge saying that they shouldn't have been expected to know that the transfer, which totaled more than $900 million before some lenders returned their share, was an error.
Yeah, exactly. And we should put out, as our reporting shows on the Bloomberg, this is an exclusive, by the way. Citigroup is coming out and saying, well, listen, it isn't over yet, and we strongly disagree, and we, with this decision, intend to appeal it. So, but it's just been fascinating, and it's also, I think, some of the discussions that we've certainly had here in the newsroom about it's a big chunk of money, and you do wonder about internal controls at a company that was able to even happen.
Well, that's the big question about what the effect on the industry will be. The ruling could have a lasting impact on the role that administrative agents play in the syndicated loan industry by exposing them to higher operational and regulatory risks. The big question is like, what could be the effect of this moving forward, especially if Citi wins the appeal?
Yeah, exactly. There are implications, and that's why this has been a closely watched legal battle, and certainly the outcome. So again, our most read story, Citi losing its bid to recoup $500 million, that mistake in a surprise ruling. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. U.S. stocks are trading mixed. We've got the Dow, the S&P, both at records right now. A retreat from a record for the NASDAQ Composite Index. Stocks are rallying as optimism over the global economic recovery continues to ripple through markets worldwide. S&P up 2 points, up 0.1%. The Dow up 80 of 0.2%. 10-years down 26/30 seconds. 10-year yield now 1.29%. Gold down 1.5% right now at $17.94 the ounce. West Texas Intermediate crude up 1%, 60.06 a barrel. Brent 63.37 up 0.1%. A surge for natural gas. Natural gas up now by 7.4%. And a headline from the Bloomberg Professional Service worth repeating: Occidental Petroleum declaring a force majeure as cold shuts in Permian oil. Lots of earnings after the bell. Among them, Boyd Gaming. Right now, Boyd is up 1.9%. Lattice Semi up 0.8%. Devon Energy up 5.5%. And Occidental Petroleum up by 4.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and we're getting ready to count you down, of course, to the closing bell. Just got about an hour left in today's trading session, but certainly one of the stories that has caught our attention. You know, it's interesting. You go back, a couple of weeks, and we were all over Robinhood and GameStop. It ain't over yet, folks.
No, it is not over. In fact, we are expecting Vlad Tenev, the CEO and one of the founders of Robinhood, to testify in front of lawmakers later this week. We're actually going to be doing a live quick take on that.
Yeah, exactly. And it's really important, and it's going to be interesting. And when he goes before those lawmakers, he's going to be in some pretty interesting company. And among them, billionaire Ken Griffin, whose firms we know, a market maker and a hedge fund, definitely played different behind-the-scenes role in January's meme stock mania. Say that 5 times fast. But I think, lawmakers want to understand what happened. Were there problems in the system? Were there any laws broken or what have you? Do we need more regulatory oversight, or did the system ultimately kind of work out?
So that's the big question I have, Carol, because so often when you see these hearings and executives do get called in front of lawmakers are very good at creating sound bites that end up getting played on cable news later in the day, or perhaps even on Twitter in this day and age, right? They cut them, they put them on Twitter, and there they are. The big question is what can actually happen as a result of these hearings?
Right. And I do think it's really important that everybody understands. I was having a conversation with one of my brothers, and he's like, now, what exactly happened? There's a lot of moving parts to it to really kind of understand, and you need to understand what happened in order to understand if there was something that needs to be fixed. Tracking it all for us has been Annie Massa. She's investing reporter at Bloomberg News. She's on the phone in New York City. Her story among our most read on the Bloomberg, and it has to do with the Robinhood CEO who's been, Annie, hiding out in a hotel?
That's right. So he's been really getting some anger and criticism from Robinhood traders in the weeks following the GameStop saga. And, that's unfortunately included death threats, and that's caused him to take refuge in a hotel in these kind of confusing days leading up to the hearing.
But there's also this sentence that's kind of puzzling to me, Annie. Privately, the CEO has been making grim jokes about feeling hated, a nod to the tough audience of lawmakers who could make life harder for his firm. There's this conflict there, right? Like, on the one sense, he is getting death threats, but in the other sense, he's kind of joking about it.
Well, he has a very serious task ahead of him on Thursday. He'll be among the voices testifying at this virtual congressional hearing over what happened in all of the volatility that we saw in late January and earlier this month. And he'll have to make the case that his platform has not been endangering its customers or was not, doing something nefarious. And that's really a narrative that flourished online. There were these conspiracy theories that popped up, around in the height of this GameStop issue. So he's going to have to clarify for lawmakers that his position that they've done nothing wrong.
Talk about, though, Annie, being whipsawed, because investors are like, hey, Robinhood, we still like you, and we actually were going to give you, or we did already, $3.4 billion to kind of shore up the firm. Meantime, lawmakers are like, wait a minute, what did you do wrong? Like, it's just an interesting juxtaposition.
Absolutely. Whipsawing is the right word. I mean, on one hand, you have VC investors, like you mentioned, pouring over the course of a couple of days, $3.4 billion into Robinhood to help shore it up against some of these collateral calls that it was receiving in the height of the volatility. And on the other hand, you have the anger of customers, the confusion of politicians. So there's a lot of different, very heightened sentiment on all sides coming in right now. But yeah, I mean, it's worth noting that Robinhood's VCs have shown more confidence in the company than ever in this crazy time.
Annie, what's the worst case scenario for Robinhood after these hearings?
Well, we're going to have to watch carefully. I think kind of one explanation of what's been going on for Robinhood is they've been trying to rush to explain some actually very niche, arcane details of how the markets work. I mean, a lot of people don't normally talk about clearing houses and collateral calls and brokerages, all these like guts of the brokerage system on a regular basis. So it's kind of like, bringing an encyclopedia to a gunfight. You have all these angry politicians, all these angry users, and you have to try and give a very detailed explanation of what was going on and walk them through it. So I think that will be one of the biggest challenges facing Vlad when he goes before, the House Financial Services Committee later this week.
What about the co-founder? What's up with him?
So Baiju Bhatt is the other co-founder of Robinhood. He stepped away as co-CEO because Vlad and Baiju shared the co-CEO role up until late last year. And now, as the company is angling for an IPO at some point this year, the first thinking was that it would be in the first half of the year. Vlad has emerged as the sole CEO, the sole face of the company. So, I mean, it's crazy timing. He's the one that has had to deal with all of this and be the face of the company in all of the fallout of the GameStop issues.
I have to say, I love how you liken it to Apple and the difference in responsibilities and who was the face of Apple, Steve Wozniak versus Steve Jobs. So it's a great write through and a great read and a great scoop. Annie, thank you so much. Bloomberg News investing reporter Annie Massa on the phone in New York City.
In February is Black History Month, and throughout the month, Bloomberg Radio is celebrating pivotal moments in U.S. Black history. Here with more is Bloomberg's Renita Young.
On this day in Black history in 1951, the New York City Council passes a bill prohibiting discrimination against African Americans in city-assisted housing. The bill was mainly directed at the Stuyvesant Town Housing Project, at the time a public-private partnership project. Managers of that development prohibited Black tenants who had been active in the campaign to stop racial discrimination. Lawsuits were filed claiming that the project was public or semi-public and thus violated anti-discrimination laws for New York City public housing, which were rarely enforced. 1 month later, the Brown-Isaacs bill became law in New York City. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
All right, Renita, thank you so much. And coming up in the next hour, we're going to check in with the Impossible Foods president, Dennis Woodside. He is back, the company is, and they've got an interesting strategy that they're doing right now.
They do. And Carol, in preparation for this, I ate 2 pounds of Impossible ground meat over the weekend. I'm not kidding, I did. Along with the help of my wife. And there's leftovers too, I should say.
Well, then you are primed.
Yeah, I'm ready
for this interview. So we're going to do that. We're also going to hear later on from a senior executive at Goldman about their new startup, really reaching out to individual investors. Now, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week with Tim and myself, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is up next.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, February 16th. The Dow, the S&P, both higher, both at records, and a retreat from a record for the NASDAQ Composite Index. Right to the numbers, S&P up now by 1 point. That is a gain of less than 0.1%. The Dow is up 80, higher by 0.3%. But on the minus side, NASDAQ down 36 now, a drop for the NASDAQ Composite Index of 0.3%. The NASDAQ 100 Index down 0.2%. 10-year yield 1.29%, down 27.30 seconds. Gold is down 1.3%, 17.94 the ounce. West Texas Intermediate crude up 1%, $60.08 a barrel on WTI. Brent up 0.1%, 63.36. A surge for natural gas, all weather related. Nat gas up 7.3% at $3.12 per million BTUs. Stocks climbing to records as optimism over the economic recovery continues to ripple through markets worldwide. Now, what about the interest rate environment and what it means for the economic outlook? Subhadra Rajappa is head of U.S. rate strategy at Societe Generale.
Really, where low interest rates impact the market is in interest rate sensitive sectors of the economy, like housing or auto loans and the likes. And those sectors are going to continue to perform well because a lot of them probably have rate locks in place if they're already going to buy a home. So there's a little bit of a lag between the rise in yields and the impact on the broader economy.
Occidental Petroleum shares, they are advancing right now by 4.7%. Occidental Petroleum has declared a force majeure as the cold shuts in Permian oil. Occidental, by the way, will be reporting after the closing bell. Among some of the other oil names, ExxonMobil up 3.2%, BP up 6%, EOG Resources up 4.4%, Pioneer Natural up 3.5%. Stocks now lower, S&P down a point. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yeah, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. Impossible Foods cutting its suggested retail prices by 20% at U.S. grocery stores. This move seen as key by the company's president, Tim, to get people to try the brand and keep on coming back.
That's me.
That's you.
Yeah,
You said
full disclosure.
2 pounds over the weekend?
Yeah, 2 pounds.
2 pounds. All right, so let's get into it and let's see
true.
what he has to say. Impossible Foods president Dennis Woodside is with us, joining us on the phone in Menlo Park, California. Dennis, by the way, former COO of Dropbox, was the CEO of Motorola Mobility, put in charge of leading its transition after its acquisition by Google. Dennis, so nice to have you here with us. How are you? And tell us about this strategy. What was the catalyst?
Well, first of all, thanks for having me. Yeah. And Tim, thanks for being a customer. So the catalyst, look, our mission is to completely replace animals in your diet. And for us to do that, we have to produce a product that tastes great. We have that, but it has to be priced right. And consumers are very price sensitive when it comes to their meat and the meats that they purchase in grocery stores. We've scaled so quickly over the last year. We've gone from 200 grocery stores to over 17,000 that we've been able to get a lot of efficiencies in our supply chain and drive our costs down. So we've passed those costs on to our consumers in the form of a 20% price decrease. We don't think this will be our last. We have to compete with animal products, so we're going to do that.
So when will it be as cheap as ground beef?
Well, if you think about what we do, we take plants and we turn them directly into meat. And what the animal does, the animal's kind of an intermediary that requires a lot more land, a lot of water, a lot of labor, a lot of transportation, oil, gas to move cows around, that sort of thing. So in theory, our product should be much lower priced than cows over time. But it just takes time for us to optimize the supply chain to scale up. Animal-based meat today is less than 1% of the total meat consumed in the U.S., but that's going to change pretty rapidly. And as that does, the cost for the whole industry, including us, will come down, and we'll be able to compete much more aggressively on price.
But timeline-wise, though, are you thinking, in years that you can count on one hand, or is this like a decades-long progression?
Absolutely. No, absolutely years that you can count on one hand. There are portions of our product now, or elements of our product now, that are at the cost of the cow, but there's a lot of There's a lot of processing costs and transportation costs, packaging, all those things that we have not yet fully optimized, and that just take time and scale to get right. So the packaging, what the actual product shows up in on shelf, that's expensive. But as you get bigger, those costs come down.
So that's what I was going to ask you. Is it just a case of when you're selling more, Dennis, the math just changes? When you're selling more product, the costs go down. Is that what it comes down to, or is it a case of being able to squeeze even more costs out of the current systems?
It's a little of both. So what we've been able to do over the last year is go back to our suppliers and negotiate better prices because we're driving a big part of their growth. We've also been able to get better utilization out of our factory. So we're running 3 shifts a day instead of 2. And you amortize that fixed cost of the factory over more products, and that allows you to take your price down over time.
Hey, I'm curious.
And we don't see that stopping. That's just going to continue.
I'm curious too, Dennis. Have you guys done some focus groups with customers who are just like, it's too expensive right now. I can't do it. I want to do it, but I can't.
So first of all, over 80% of people who are trying Impossible for the first time, they're meat eaters. So they are substituting Impossible for all kinds of meat products, not just ground beef. But when they try it, the number one thing that they say they love about the product is the taste. It tastes just like beef. It's got the same nutritional profile as beef. The one thing that they say that they don't like as much is the price, and that is absolutely a barrier to repeat purchase and frequency of purchase. But if we can get the price right, that's a pretty obvious lever to pull to grow our volume and continue to scale.
How do the habits of how people are eating this type of product, how did they change or have they changed during the pandemic?
Well, so a year ago, we weren't even available in retail. And when the pandemic hit, we realized that we were available in 200 stores. We realized that we needed to scale up really quickly. And what we noticed was that consumers were flocking to plant-based products. They were cooking more at home, and they were willing to try something different. They had maybe a little bit more time to cook, or they were cooking, and in the past they would have been eating out. So they were open to trying new products, and that's why our sales have really taken off at retail. And what we're also noticing, obviously, there's a lot more delivery activity, consumers buying Impossible on digital platforms, whether it's direct delivery from grocery through Instacart, or they're buying finished entrees through DoorDash. So we're seeing growth across all of those areas. The one area that's obviously been impacted quite a bit are the smaller restaurants, which have really suffered.
Hey, talk to us too, Dennis, about collaborations. I'm curious what lasting traction you are finding from some of the collaborations and partnerships that you have been doing. We know all the folks in kind of the alt food space have been linking up with the likes of whether it's a Taco Bell, a McDonald's, and you guys, I know, had teamed up in 2019, I think it was, with Burger King for Impossible Whopper. So I'm just curious how those are helping you in your mission.
Yeah, so we have Impossible is now available pretty broadly in the U.S. BK, you mentioned Burger King, White Castle, Red Robin, Qdoba are just a handful. We added Starbucks, a Starbucks breakfast sandwich in the middle of the pandemic in June of last year, and we've seen that product do incredibly well, exceeding both of our expectations. So these partnerships are very important, and every restaurant operator is realizing they need to have a plant-based meat option on the menu. Consumers are asking for choices and asking for alternatives, and so it's at the top agenda of every executive in the QSR space that I talk to for sure. And those who don't have a plant-based meat option now are absolutely considering one.
Dennis, what is the difference between Beyond Meat and Impossible Foods?
Well,
in terms of taste of product, I should say.
Yeah, the two things that consumers tell us is first of all, our product tastes just like meat, and survey after survey shows that the liking scores, the preference scores for our product versus animal-based meat are relatively even. So people have a hard time telling the two apart. The second thing that chefs tell us is the product handles just like ground beef. The color when it comes in raw, the way it transitions from a pink or reddish raw state to a cooked state, the way it sizzles, the way it smokes, all those things. And that's mostly due to the intellectual property we have around an ingredient called heme, which is found in every animal, but we've been able to ferment it from plants and use that as the key ingredient that aids in the transition of the product and the color of the product.
So it's meatier, like it's more like meat.
It's much meatier. That's what we're trying to do. We are simply trying to replicate the animal in every sense. The nutritional profile over time, better the animal. We need to beat the cows, what we say.
Well, and I have to say that in our lunch offerings here at Bloomberg, like often comes up some alternatives.
Yeah, we had one today.
Right, and I'm not quite sure whose they are, so I can't speak to that. What I am curious though, too, Dennis, is you guys have been spending a lot on R&D, and you plan to double the size of your R&D team, from what I understand. What's the R&D focusing on, and does it include anything like 3D meat, which is something we've started to talk about here at Bloomberg? Yeah.
Yeah. So what we're trying to do is replicate every animal protein that you consume. There's well over 1 trillion pounds of animal protein consumed every year. So this market is absolutely massive. It's one of the largest technology markets, if you call it a technology, in the world. And there hasn't been a whole lot of innovation. We're eating kind of the same products our grandparents ate, prepared kind of the same way with the same nutritional profile. So we're one of the first companies that's focused at the molecular level on re-engineering meat, all from plants. And so that's starting with ground beef because it's such an iconic product for most Americans. But focusing on pork, we have a pork product that we shared at CES last year. Sausages, we have lab prototypes of basically every meat imaginable, including steak. And we see a day when we'll be able to offer any protein on the menu in a plant-based form. It will take a while for us to get there, but that's why we're investing so heavily in R&D.
Are you going to go into also fish? And I know we've got somebody we've been planning to get on the show that's got plant-based shrimp. So I'm just curious, is it just, you can go anywhere? And will you? Yeah.
We believe that the technology we have, the intellectual property around heme, which is in every single type of meat in the world, as well as all we've learned in building the Impossible Burger, gives us the opportunity to compete in all of those spaces. For now, our primary product is ground beef, but that's going to change very rapidly.
What's the exit plan here for investors?
Tim and I were both thinking about this.
Well, I mean, look, you're Beyond Meat, I would argue the chief rival, is a publicly traded company. You've raised a lot of money from a lot of significant investors. What's the IPO plan?
Yeah, well, Pat Brown, our founder and CEO, he has said that eventually, we will need to go public. We will want access to the public market financings. We'll want access to credit markets as well. But we'll do that on our own timeline. We're well funded, as you mentioned. We've got plenty of cash in the bank. We have a number of big investments that we're going to be making over the next year in capacity, so in manufacturing facilities and in new products that we'll be launching. At some point in time, it'll be the right time to make that kind of public decision. But for now, we're pressing ahead as a private company and continuing to scale the business.
Well, it's safe to say, Dennis, there's some upside to that, to not have to do this R&D and expansion and kind of experiment a little bit with maybe some new areas to be able to do it without being public.
Well, our shareholders are very supportive of us being very aggressive. They see the size of the market. Bill Gates is recently talking about the importance of developed economies moving to more of a plant-based diet or plant-based meats, and how that's so important for the environment and for the sustainability of the planet. That there's a wave of consumer sentiment, government sentiment, all behind supporting this industry. And so our investors are in it for the long game. If we are sitting here in 10 years, I believe a large percentage of all Americans' diets will have moved to a plant-based product. And that's a very big business opportunity for us, and that's what our investors see. So they can be patient and give us some time for that to happen.
Is it becoming healthier, though? Like, I look at sodium and all those different things. Is it getting better?
Absolutely. So if you look at the sausage in the Starbucks Impossible breakfast sandwich, as an example, that contains about a third fewer calories, a meaningfully lower saturated fat, no cholesterol whatsoever. So sausage is a really indulgent product. It tastes amazing, but it's got a lot of saturated fat. It's got a lot of cholesterol, a lot of calories. So in our first iteration, we've been able to reduce that quite meaningfully. And as we continue to innovate, we'll get better. So the product will get healthier, or we'll have different nutritional profiles that as we respond to consumer demand, and also as we just continue to improve upon our own technology. It really is a technology business, and in the past, food has not been thought of that way.
That's fascinating, like to think about it that way, and I agree. Dennis, thank you so much, and thanks so much for giving us such a large chunk of time. We really appreciate it. Dennis Woodside, he's president at Impossible Foods, on the phone from Menlo Park, California. All right, let's get another check on world and national news. Over to Nancy Lyons in D.C.
I'm hungry now, Carol.
I know, I hear you.
Anyway, the White House says President Biden supports a 9/11-style commission to investigate the deadly U.S. Capitol riot. House Speaker Nancy Pelosi has said lawmakers want to review the facts and causes related to the attack. White House Press Secretary Jen Psaki.
President Biden has made clear his views on the tragic events of January 6th, including where responsibility for them lies. He backs efforts to shed additional light on the facts to ensure something like that never happens again.
The U.S. Senate is preparing to fast-track President Biden's pandemic spending bill by taking the House bill to the floor without prior consideration by its own committees.
Fast action is what the economy needs, former White House economist Austin Goolsbee said in a Bloomberg interview.
The slowdown of the economy now is absolutely the result of playing this wait-and-see game through the summer and hoping that it was going to get better. And then when it got worse, we suffered. This is a temporary one-time disaster relief payment for something that's not a normal business cycle.
Goolsbee said the threat of inflation is minimal, noting that the Federal Reserve has sought to raise inflation to 2% for 14 years without success. In Washington, Irv Chapman, Bloomberg Radio.
The nation's midsection continues to deal with power blackouts as many states deal with a deep freeze. Almost 5 million customers are without electricity, so to prevent a collapse of the power grid, many suppliers are instituting rolling power outages to handle demand. In Texas, the blackouts are due to frozen instruments at natural gas, coal, even nuclear facilities. The deep freeze is expected to linger through tomorrow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's go to Charlie Pellet for a business flash.
Hi, thank you very much. And as you mentioned, crude oil moving higher today on that freeze. Got to begin with natural gas surging 7.4% right now, $3.12 per million BTUs. West Texas Intermediate crude rising above $60 a barrel for the first time in a year, $60.16 right now on WTI, up 1.2%. Brent is at 63.43, up today by 0.2%. Stocks are advancing, registering records as optimism over the economic recovery continues to ripple through markets worldwide. 43 minutes to go ahead of the closing bell. S&P up by 2 points now, up by less than 0.1%. The Dow also at a record, up 88 now, up 0.3%. NASDAQ is down 36, a drop there of 0.3%. 10-year yield now 1.29%. Gold down 1.3%, $17.95 the ounce. Again, recapping, stocks higher, barely. S&P up less than half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and the Bloomberg Business Week Small Business Survival Guide, Tim, it's been checking in with and tracking small business owners around the country since the pandemic and economic shutdown began. It's hard to believe, almost a year ago.
Oh, I cannot believe it. But yeah, March.
Right? Yeah, exactly. So in this week's segment, we're going to get an update a little bit on kind of what's changed and to see if some of the small business owners out there are hopeful, hesitant, or maybe both in this year of 2021. Let's bring in Bloomberg News editor Dimitra Kasanides. She is the kingpin behind it all, and she's on the phone in New York City. Dimitra, good to have you here. And I have to say, it's been fun to check in with you over the last year about these small business owners, what they're going through, really talk to, what they have been facing. So tell us a little bit about this story out by Nick Leiber.
Thanks. Hi, Carol. Yeah, it's been good checking in, too. Sometimes really tough to consider what they're all going through. And what we have now is, picking up with our coverage of the past year, a look at where some of the folks that we've written about in the past year are right now and what they're looking ahead to. Because, as you just noted, it is just coming up on a year. If you're still around as a small business, it's still a very mixed bag. It's very much, some greater degree of optimism, but also many challenges that remain. And, when you consider that and you consider the past year for many of these owners, emotionally and otherwise, it's really been very, very challenging. And finding the reserves that they need to keep going, to keep pushing ahead, looking for the sources of funding, figuring out how to adjust the business, how to pivot something, discontinuing something one month, continuing it the next. I think it's just been a really tough year. And the hope was it would be much better right now. There is much more optimism, I think. I think the story that we have that Nick can speak to about Molly Neitzel does speak to that, but also, again, frames it as something where the optimism is certainly greater than a year ago, but the challenges remain.
Yeah, let's go ahead and bring in Nick Leiber, a contributor to Bloomberg Business Week, joins us right now on the phone from Brooklyn. Nick, what did you learn from the way that Molly Moon has been able to get through this pandemic that has been almost a year?
Thank you so much. I think there are really three takeaways. Molly had a good existing relationship with her community bank. She was relentless, and her team were relentless in calling the SBA. They were also aggressive, sort of fact-finding and advocating to figure out which government programs they could take advantage of to try to keep themselves in business when everything sort of shut down. Molly has been she looks at her numbers a lot, and she recognized way back in February 2020 that things were weird, things were off, things were down, and she activated. So I think that sort of aggressive stance was very helpful to her. And then calling her back, getting her back on the phone to see, hey, how are things doing now? She was in a much better shape than she had been when we talked to her last year.
Hey, Nick, the Paycheck Protection Program, I think we've had a lot of conversations with you, with Demetra, with others, just concerns about small businesses just getting lost amid the pandemic. For her, though, the PPP program, it worked.
It didn't work that well the first go round.
Mm-hmm.
It was really hard for her to figure out. There were big lines, there were long waits as she tried to get people on the phone. But the second time, because she had done it before and because her bank had done it before, it was much smoother. And that program is available to all or to all who meet its criteria until March 31st.
If we could go back in time, Demetra, and create policies for these small business owners that would have gotten more small business owners through, at least to where we are now, based on the reporting from our colleagues at Bloomberg Business Week, like what more could we have done? What more could the U.S. government have done in order to help out these small businesses?
Sure. I think there's a range of stuff that possibly could have been done, but there's so much debate around that also. I think, the amount of the support that was being given, the conditions on which maybe that it was being applied, PPP in many ways was held up to a lot of criticism because of the fact that, there were all these conditions with employment and keeping people employed, so something where there weren't as many strings attached, maybe straight out grants. Finding grants, easier grants, those kinds of programs would have been easier, wouldn't have raised as many questions, because in addition to the anxiety about the economic situation that they found themselves in, sure, there were programs announced, but as Nick just said, you had to invest a lot of time and effort in figuring out those programs. Then you had to figure out the conditions for making sure that maybe you would get your loan, I'm sorry, the words are escaping me now. You could get rid of the loan and have it just be a grant if you met the conditions. There was so much attached to the way that the support came through, and paperwork and conditions and regulations and all. It just complicated things at a time when, in addition to everything else, you had to do everything else, right? You had to keep the lights on, you had to pay the bill, you had to pay the rent, you had to deal with your employees, you had to deal with your own family. Maybe another family member was out of work. And then it's like, hey, and now we're going to add all this paperwork and all these headaches. Make it simpler, make it easier. Don't make it a loan. Don't make it a condition of keeping people employed. Find a way to give them the money that they need outright.
Right. And
I think that's a part of it.
No, I think that's a really important part. And I also thought there was an interesting segment in your story, Nick, where, the reminder of the healthcare costs and paying premiums for a small business, how problematic it is. And the one small business owner, Molly, talking about we need Medicare for all who want it and how insurance premiums hamper innovation for small businesses. I really feel like we've known it, but once again, the pandemic just reminding us big time of what a problem it is for small businesses when it comes to keeping up healthcare and make sure they're providing it for themselves and their employees. Dimitri Kastanides, editor at Bloomberg News, on the phone from New York. Nick Leiber, contributor at Bloomberg Business Week, on the phone from Brooklyn. Small businesses, understanding it is important.
Yeah, and there's still more of the pandemic to get through. It has felt longer than a year, Carol. It really has.
And it ain't over yet.
Yeah.
All right, you're listening to Bloomberg Business Week. It is Tuesday, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic, and it is Tuesday after that long holiday weekend. Yes.
I spent all weekend studying for the song of the day.
All right, we'll see how well that's
listening to a lot of Spotify.
We'll see how productive that studying is. In just a moment, we'll get to the chart of the day and Dave Wilson. In the meantime, let's get back to your top business stories and to Charlie Pellet. Hey, Charlie.
Well, hello there, and here's what's going on. We've got 28 minutes to go ahead of that closing bell with the Dow higher now at a record. S&P, NASDAQ retreating from records. Optimism over the economic recovery continues to ripple through global markets. S&P little change, swinging between gains and losses. Case in point, right now it is up, barely up by just about half a point. Got to stay with Bloomberg Radio right through the close to see how things shake out, and of course how Asian markets react tonight with Daybreak Asia. We've got the Dow up 81 now, up 0.3. NASDAQ down 44, a drop there of 0.3. S&P little changed. 10-year yield 1.29% this Tuesday. Gold is down 1.3%. Spot gold at $17.95 the ounce. West Texas Intermediate crude up 1.2%. $60.20 a barrel. First time in a year that WTI has been above $60 a barrel. Natural gas surging 6.7%. at 310 per million BTUs. The Department of Health and Human Services says more than 10% of hospital beds in U.S. hospitals were occupied by COVID-19 patients on February 13th, the least since November 10th. As for COVID variants and vaccinations, Dr. Amish Adalje is senior scholar at the Johns Hopkins Center for Health Security.
So if we can get our nursing home patients vaccinated, if we can get the community dwelling elderly vaccinated, then I think, yes, the new variant is here and it's causing cases, but it doesn't cause the same damage that we're dealing with now, with people dying from this in the thousands per day. That's the goal here, is to get to get this virus looking like the other coronaviruses that cause 25% of our common colds through vaccination.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Recapping S&P little changed, lower by half a point. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. Nice.
Diana Ross. I'm coming up. I'm afraid to even say it. I remember it from cheerleading days. It's out there. So, Dave Wilson, why that song?
Well, it kind of follows on from last week to some extent. I mean, remember we talked about how Diana Ross was a duet partner of Marvin Gaye, and of course, she was in the Supremes with Mary Wilson. So that's part of it. Mm-hmm. The other part is, you're seeing a coming out party of sorts when it comes to some of the smallest publicly traded U.S. companies. These are the ones in the Russell Micro Cap Index. Basically, you take the bottom half of the Russell 2000 by market value, you add in a bunch of companies that are even smaller than that, and you get an index. And usually it tracks the Russell 2000 fairly closely, but this year is not a usual year. And that's what the chart illustrates, As of Friday, the Russell Microcap, which, if you looked at their component stocks on average are about a third of the value of those in the Russell 2000, was leading that Russell 2000 index by 12 percentage points.
Wow, that's a big gap.
And in fact, the gap is widened today because the Russell 2000's down and the Russell Micro Cap is up a touch, less than 0.1%, but it's up. So, it just shows you how exceptional things are this quarter. And this was inspired by a chart I saw from Michael Hartnett at Bank of America, just kind of breaking down the broader market by capitalization in essence. And, the smaller you got, the bigger the gains this year. But what's really unusual in this case is how much these relatively tiny companies are beating even the smaller companies as represented by the Russell 2000. It's just staggering. Yeah. We've never seen anything like it on a quarterly basis. And that's what the chart shows, going back to 2005 when the Russell Microcap was first calculated. Want to know more? Email dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, got it. Right now, we want to go over to Bloomberg TV. Goldman Sachs unveiling Marcus Invest today. Shonali Bossack of Bloomberg catching up with Stephanie Cohen, global co-head of Goldman's Consumer and Wealth Management Division, about their new app.
Division, 7 weeks, less than 7 weeks into the job. Thank you, Stephanie, for joining us.
Always great to be here. Thanks for having me.
So one thing that really struck me about Goldman's new investing platform through Marcus is that it's through ETFs. You're not necessarily letting people pick and choose their own stocks. Why was that the decision as you were building something new?
Right. So maybe as you were just talking about the democratization of finance, which is something that we're really focused on, maybe I'll give you a little bit of perspective on the overall consumer strategy at Goldman Sachs. We want to be the leading digital banking platform. And we're doing that really through two different strategies. The one that you've been talking about, which is our Marcus direct-to-consumer strategy. And we've had lending, we've had savings, we've had an insights platform, which helps people manage their money. And now we have Invest. And the idea behind this is that we can be someone's holistic bank. Later this year, we plan to launch checking, and we really think that's the final step. It won't be the end of our product roadmap, but we really think by adding both Invest and adding checking, we can be someone's primary bank. The second strategy, just so you understand it, is that we're going to take those capabilities and we're going to embed them in the ecosystems of our partners. That's things that we're doing with Apple. We've also announced a partnership with GM. And so we think Invest is this wonderful complement to this idea of being someone's primary bank, and it takes the best of Goldman Sachs in terms of investing advice and embeds that right into the Marcus app.
But I want to get back to that initial question about why ETFs, why broader market rather than individual stocks. A lot of what we've seen around the democratization of the stock market through Robinhood, for example, is the retail investors picking and choosing. Is there a concern around that at all, or is it just a more scalable strategy to do it this way? How do you think about it?
I would think about it as this is where we're starting right now. As our research and our data shows that the best path to maintaining and growing wealth over time is to invest in diversified portfolios. We use those same diversified portfolios across our wealth management business, and we're using them inside of Marcus. And so you can view this as the first step in Goldman Sachs getting into investing for the consumer.
So that's hinting more changes ahead for you. Again, 7 weeks on the job. What are the changes you're making? What can we see next coming out of this platform?
Yeah, so a couple of things. This is a very exciting day for us to launch Marcus Invest, but it's also an exciting day because we had a new partner join Goldman Sachs, Swatia. She joined us from Stripe, and before that, PayPal and Cap One. And I raise it because these are some of the changes that we're implementing, which is having really this two-pronged strategy of having the direct-to-consumer markets business, which Swatia will run, and then having the large partnership or financial cloud business, which Dave Stark will run. So I think you can view that as one of the major changes that we've implemented as we've gotten to a point where we have a more fulsome platform. I talked about the fact that we have lending, and then we have savings, and we have insights, and now we have Invest, and we'll soon have checking. That whole capability allows us to be someone's primary bank. And as you mentioned, we're going to keep looking at other things on the roadmap. The way that we think about it, before we launched Marcus, we talked to thousands of customers. Actually, we talked to 10,000 customers, and they told us what they wanted, and they wanted help managing their financial lives on their phone. And that's what we're helping them provide. And we've started with the products that we have, and we'll continue to invest in more.
Stephanie, another question I have for you is, this is all coming on an interesting week. We were seeing a hearing on Thursday that involves Robinhood, some major names in the hedge fund industry. We're getting news today that gamification is something that regulators will be looking at. It's something they're worried about. How are you worried about this as far as investing more broadly for a younger generation? What do you think the regulators should be looking at?
Yeah, I'm going to leave that to the regulators, but what I'm going to tell you that we're focused on is we're focused on helping people better manage their financial lives. And there's a bunch of ways to do that. I'm going to give you an example from the Apple Card just because I think it's a really good example. So the way that the Apple Card works is that when you get your bill, there's a payment wheel, and you get it on your phone, and it's set actually at paying your full bill. And the idea is a nudge around paying your full bill, and it tells you the consequences if you don't pay your full bill and how much that's going to cost you in interest. In addition, it allows you to pay your bill multiple times per month. And so we think that there are a bunch of smart innovations that you can put inside of your products that help people better manage their financial lives. So that's how we're going to think about it.
So I can see you thinking about all the new products that are ahead of you right now too. You had mentioned checking. That is something that I know a lot of people have been keeping an eye on. How soon can we see a product?
It's funny. Checking is so funny because it's funny that we're even calling it checking, right? It's a digital product and we're calling it checking. Interestingly, all that customer research that we did told us that if we didn't call it checking, no one would know what we were talking about. And so the idea is to really help people have a transactional account where they can get their direct deposits and they can manage their payments and do that in a smart way. And our plan is to have that out later this year. So hopefully people will be able to join it in 2021.
And Leslie, people have been talking a lot about Bitcoin. A lot of people want to own it. How is Goldman thinking about this when it comes to their more retail products?
I think we're going to look at this the same way we look at everything, which is we're going to listen to our customers. And by the way, we listen to our customers directly by talking to them. We listen to what they're saying in our call centers. We listen to what they're saying on social media. And so we'll listen to what they have to say and we'll decide our product roadmap from there.
Stephanie, thank you so much for joining us. That was Stephanie Cohen, Goldman Sachs co-head of Consumer and Wealth Management. Romaine, back to you.
All right. And of course, Shonali Bossack there at Bloomberg TV talking about Goldman Sachs unveiling Marcus Invest today. It's interesting. We're just seeing more and more platforms, and I do wonder how much of what's been going on between Robinhood and so on and so forth, where, big Wall Street powerhouses are thinking, let's not forget about the retail investor.
Yeah, and this move from Goldman Sachs has been years in the making, starting with the acquisition years ago of Clarity Money. They shuttered that a few weeks ago, folding some of the features into Marcus's, new product offering from Goldman Sachs. But there's also fierce competition from startups like Betterment and Wealthfront as well, that are these so-called robo-advisors that, are different from Robinhood in the sense of you're not picking individual stocks, you're just setting it and forgetting it.
Well, and I do feel like Goldman's been one of those firms that has really been trying to go after the individual investor. But I do wonder, when it comes to the financial composition and where the company's really making money, it's not here yet.
It's not. And
it may never be, right?
It may never be, but we do see him moving more into consumer. I mean, we heard her talk about the Apple Card, the sponsorship, the partnership that they have with Apple. And I do wonder to what extent this could potentially serve as a way to get more and larger customers into the Goldman Sachs umbrella.
Right. A younger individual investor today who might be on an app might later on have a lot of money to manage and be part of the wealth management business.
Exactly.
Maybe that's how you see it. All right, let's get over to World of Nat with Nancy Lyons. Hey, Nance.
Hey, Carol. Just 3 days after his acquittal in the Senate, former President Donald Trump is facing a new accusation of inciting last month's riot at the Capitol. Bloomberg's Nathan Hager has more from Washington.
It's coming in the form of a federal lawsuit filed in Washington. Democratic Congressman Benny Thompson is suing the former president as well as his personal lawyer Rudy Giuliani, accusing them of conspiring with the Proud Boys and Oath Keepers to carry out the January 6th insurrection. The suit hinges on an 1871 law known as the Ku Klux Klan Act, which includes protections against violent conspiracies that interfere with Congress's constitutional duties. In Washington, I'm Nathan Hager, Bloomberg Radio.
The pace of COVID-19 deaths is expected to drop sharply in the next 4 weeks. That's according to a new forecast from the University of Massachusetts. By March 13th, deaths are expected to be around 12,666 deaths, which would be a 43% drop from the more than 22,000 deaths reported last week. But COVID-19 is still here, and it's disrupted plans for all sorts of holidays over the past year. Louisiana's had to rethink how to celebrate Mardi Gras today. Lieutenant Governor Billy Nungesser says the pandemic has hit the tourism and hospitality industry hard, and he's urging Congress to pass COVID-19 relief for those who are trying to stay afloat.
Mardi Gras has a $1 billion economic impact in Louisiana. Remember, we have Mardi Gras all over Louisiana. So it's devastating to our economy here.
Last year, before the pandemic hit, more than 53 million people visited Louisiana for Mardi Gras. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now let's go to Charlie Pellet for a business flash.
Hi, thank you very much, Nancy Lyons. Here's what's going on. We're looking at a mixed day on Wall Street. The Dow at a record, S&P close to a record, fluctuating, NASDAQ retreating from a record. And now let's head over to the First Word breaking news desk for today's afternoon call. Lots going on. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed right now, with the Dow currently up 75 points. S&Ps are a little changed. NASDAQ is lower by 44. The U.S. 10-year yield jumps to 1.3%. Gold is down 1.2%. And transports gained 22 points. Among the main 11 SB sectors, leaders were energy and financials. Real estate and utilities were under pressure. And leaders to the upside in the Dow were Salesforce and Boeing, while Walgreens and Amgen led to the downside. After earnings, CVS fell 5%. Palantir dropped 13%. And in other news, Bitcoin climbed above 50,000 for the first time. Wrapping things up, RingCentral, Avis, and Devon Energy all report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 13 minutes left in today's trading session. It is time for the Drive to the Close. Doug Sioka back with us, CEO and partner at Kavar Capital Partners. Roughly $900 million in assets under management, and they are based in Leawood, Kansas. And Doug joining us once again from there. Doug, hey, good to have you here. How are you?
Hey, I'm great. Thank you. Thank you for having me on.
Do you have Kansas? Do you have Kansas? Do you have snow? Is it cold? What's going on?
It is beyond cold. It is. We are in the middle of the polar vortex. We woke up this morning. It was -10.
Oh my God.
Now +8. So we really flipped the script, and the sun's out, which is helpful. But it's going to be with us below freezing, I think, for at least another 4 or 5 days. But we were below zero all weekend, which is crazy.
That is crazy. But you got power, right? And you're safe.
It's rolling, yeah.
It's rolling.
For the first time, I've been here 20-some years. I've never seen it happen before. They're rolling the grids around town with some regularity. So I hope that we stay connected for the extent of this conversation.
Hey, so what does that mean, though, for you moving forward? If this is like the first time in decades that you've experienced this, does that mean that you're going to go out and buy a generator? Does it mean that you're going to make changes to your home?
Probably neither, Tim, but I might consider either if I actually owned any tools. But the reality is this is such an outlying event that I don't think we'll make much in the way of lifestyle adjustments, in anticipation of it being more regular.
But Doug, how does it make you think about climate change and the financial impact it is having, the economic impact it is having on our world? I go back a few years and people were like, climate change, it's... we don't have to think about it. And increasingly, it's much more of a story that impacts all of us on an economic level and a financial level.
Yeah, I think that's a great thought, Carol. And I do think it is not inconsistent with the way a lot of information is transmitted. With its immediacy, its intensity, and then, whatever we feel is appropriate reactivity. But, I think that it's so dispersed, and hopefully what we learned or what other cities and communities have learned in dealing with something like this will be something that can be leveraged in more widespread elevation of people's knowledge base and preparedness in the future. But it is undeniable that it's something that is going to have an impact on cash flows, profitability, dispersion of assets. And if you don't take it into consideration as an investor, I think it's to your own peril.
So to that end, Doug, where are you seeing opportunity in the markets right now?
Yeah, we see a lot of opportunity, Tim. I think you look at the market and hitting new highs and seemingly each day and each week. It was so funny a couple weeks ago in a 3.5% downturn in the market in the worst week since October, and really thought that might have some traction until the following week, and it was the best week since October, and then we returned an all-time high last week. And we do still think that there's a lot of opportunity in certain sectors of the market if this rotation, which is certainly underway, continues to demonstrate some traction, because we're very bullish on the economy in 2021. It's just a function of finding the appropriate assets to have that reflected in areas of the market that are not overvalued.
Well, and I know we don't normally talk specific stocks, but what about areas? Because we've spent a lot of time, Doug, talking about the small cap space. We talked about micro caps, which are really outperforming this year. Where do you see the opportunities?
Yeah, in a few areas. We are big believers in that there are going to be some very permanent and positive residual impacts from the pandemic. And finding those opportunities should provide some pretty interesting and outsized return potential and opportunities. And within that intro, we love fintech, right? If you think of, it's really amazing. Just a year ago, what percentage of all transactions were still consummated in cash in this country, right? And then you flash forward to where no one wants to touch cash of their own, no one wants to touch someone else's cash, no one's leaving their homes, and it just ushered in this incredible opportunity for digital exchange of goods and services. So that's one area. Healthcare and life sciences did very well as a sector last year. We think it's not even scratched the surface of its potential. Hopefully the hurdles to get life-saving products and formularies to market have now been permanently and positively lowered. And that's going to usher in kind of a whole new generation of interesting life sciences and biotechnology companies. And then certainly even within emerging markets. We actually talked about this, I think, when I was on in December. And seeing EM gain prominence this year because of the labor and intellectual capital outsourcing that's taking place with no barriers, right? Because if you can't go across town, there's really no difference between going across an ocean. And we think they're going to continue to enhance margins, introduce new opportunities. The weakening dollar is a big part of that, as is sort of the demand that is pent up for the consumption of a lot of natural resources that are indigenous to certain parts of the EM world.
Are you planning for some sort of correction here, Doug? You did say a few moments ago that, the sell-off that we saw a couple of weeks ago, you thought it might have some legs. Are you expecting some sort of correction, some sort of sell-off in the near future?
I mean, I don't know, Tim, any more than we would typically be expecting such in any given year. Right? I think I saw a couple weeks ago that the average pullback in any 12-month or calendar year is about 14.5% going back to 1980. And last year we had obviously the whopper of all pullbacks. We also had two, little aftershocks, one in September, one in October. In 2019 we had none. In 2018 we had a big one in the fourth quarter. It would be hard-pressed for us to escape a drawdown, I think, this year that wouldn't be on or around that average pullback. Because the market, as I said earlier, is reasonably overvalued if you just consider the market, and that's a big part of its composition is because of the mega caps and the tech sector's preeminence. But we still think if you consider some of the other areas that have not taken place, that not participated last year, there's still areas in the market that will command opportunities to put dry powder if we do get that.
What do you make, Doug, of Treasury yields up to the highest since February of 2020? Our story says that the stimulus impact's still kind of getting priced into that trade. But do those higher rates, still low historically, start to get problematic anytime, or are they an indicator of something that we need to be concerned about going forward?
I think you should always be concerned. I right now think, Carol, we're in the positive aspects of what's taking place, right? If you think we've seen a lift, and we know the Fed is anchored to the front end for probably at least 18 months, maybe a little bit longer. So if we see a lift in interest rates, it's positive for three reasons. One, a steep yield curve is positive for financial services companies, which are still, the key catalyst to expressing money into the economy to exhibit that multiplier effect. Two, better savings rates. We have so many clients and there's so many people out there that don't want to be forced into taking risk to earn a reasonable rate of return for a conservative allocation. And three, you get this return of constructive pricing power in the form of modest inflation. That's positive, right, for companies, particularly as we see kind of the global economy opening up and they're exhibiting and experiencing more demand for what they're selling. A little pricing power, I think, is very positive for valuations and cash flow generation.
Well, Democrats right now are trying to get other Democrats, some more moderate Democrats, on board with that $1.9 trillion spending package from the Biden administration. Doug, what do you want to see out of Washington? What's effective policy?
I don't know that we'd get that much, Tim. I don't know that we need that much, particularly because I think it's logical to think there's going to be an infrastructure bill that gets introduced in the not-too-distant future after the blessing of the next pandemic stimulus plan. I think that the setup in Washington is actually pretty positive for the market and the economy in general because there is that quote-unquote beneficial gridlock, But I don't feel like any single party is going to have this clear pathway of ramrodding legislation that's super partisan. I think because of that, regulation stays reasonably low, taxes stay reasonably low, and that is by and large pretty positive for the economy and subsequently the market.
Hey, just got 30 seconds left here, 40 seconds, Doug. Is there one place in the market you definitely don't want to be right now?
Oh, I don't know. I mean, I think that's a hard call to make. I mean, I think some of the speculation like that we're seeing around the SPACs and some of the cheerleaders and the short squeezes, and it was interesting back 20 years ago, right? Those FOMO instincts were hard to turn back during the dot-com years, but right. I just think super selectivity is really important, and ultimately, if there are no cash flows to discount and no tangible operations to assess, the whole process possesses a lot of speculation. You need to be careful.
Hey, I didn't hear you say Bitcoin.
No, sir.
Okay.
No, sir.
Nothing in that portfolio. All right. Doug Sioka, be well, stay warm, and be safe. Chief Executive Officer, partner at Kavar Capital Partners, roughly $900 million in assets under management. On the phone from a really chilly Leawood, Kansas.
Yeah.
It's tough.
Yeah, it is.
Dealing with those rolling blackouts. We've got the closing bell coming your way in just about 3.5 minutes' time. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
For all
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange. As we wrap up trading on this Tuesday, February 16th, folks from Magellan Midstream Partners virtually ringing that closing bell, looking at a record for the Dow Jones Industrial Average, a retreat for both the S&P and NASDAQ today. Right to the numbers, we'll give you a why in a moment here. The Dow up 62 points at the close, up 0.2%. The Dow now at 31,520. S&P dropped 2 points, lower little changed at 39.32, down about 0.1%. NASDAQ fell 47, lower by 0.3%. Bond yield surged to the highest in a year. The yield on the 10-year, 1.30%. Stocks advanced, at least the Dow did. It was a mixed day. Optimism over the economic recovery continues to ripple through markets. As for the market backdrop, Doug Sioka is CEO at Kavar Capital. He was our guest moments ago right here on Bloomberg Business Week.
Yeah, we do still think that there's a lot of opportunity in certain sectors of the market if this rotation, which is certainly underway, continues to demonstrate some traction, because we're very bullish on the economy in 2021. It's just a function of finding the appropriate assets to have that reflected in areas of the market that are not overvalued.
Twitter shares climbed to a record. The social media company up today by 2.9%. They have gained just about 37% this year. Twitter recently reported fourth quarter revenue that beat projections, helped by a recovery in digital advertising. Tilray raised to a street high price target of $30.25 at Cantor Fitzgerald, which said the larger Canadian cannabis companies deserve to trade at a premium to their U.S.-focused peers. Tilray shares advanced today by 19.4%. MJ, that's the ETF MG Alternative Harvest ETF, surging today by 9.7%. Recapping, mixed Tuesday, S&P lower, down 2 points, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Master along with Tim Stanovic in our Interactive Brokers studio on this Tuesday. Charlie breaking down those final numbers on Wall Street. And it was a bit of a mixed trade here, Tim. 225 names in the S&P 500 higher today, 276 lower, 4 unchanged. And as we mentioned, off our highs and lows. You're watching the industry groups.
I am. Energy, the best performer by far, 2.25% higher. Financials, not too far behind, up 1.76. And the last one in the green today was communication services, higher by 0.4%. Utilities really lagged the pack, down 1.14%, followed by real estate down just about 1%.
Yeah, and it definitely felt like, we talked about this with Dave Wilson earlier, that it felt like a continuation of the feel of last week. Let's bring in Bloomberg News markets reporter Abigail Doolittle. So Abigail, what stood out for you in the trade today? Because it did feel like, once again, kind of mark in time a little bit.
It did feel that way, Carol, especially with the mixed close for the major averages, the fourth time we've seen that in 5 days. But, you know, what really stands out is this reflation trade. Tim was just talking about how energy and financials are on top, up about 2%. That's the case on the year. If you can believe it, energy stocks up more than 20% this year alone. So, yes, that's just about 6 weeks. The financials up about 10% over that time period. So this really has everything to do with those rising rates, helping out the banks, oil helping out energy. And then also from a top performance standpoint, and this is more reopening as opposed to reflation, the top stocks for the S&P 500 today are those cruise operators. So this also has to do with the hopes, optimism around economic recovery, and of course the vaccine having a big piece of that, Carol.
What about the bond market? What's the story that the bond market's telling us?
Well, the bond market, that is probably the big story on the day, the exciting day story on the day. Charlie Pellet was just talking about how the 10-year yield is at 1.3%. It's a long time since we've seen it at those levels. Yeah,
right?
More than a year. It's amazing.
Right.
And it wasn't so long ago that it was all about last year's range between, let's call it 0.5% and 1%. And once we broke out above 1%, it's just higher, higher, higher. And the debate there is it reflation, which that's healthy for markets, and that's that reflation trade in energy and financials, or is it inflation, which could really cause a repricing of risk? Folks are saying at 1.40, 1.5%, we could maybe see the latter. But right now, you're seeing maybe some signs of jitters around that maybe that it is ahead again with that mixed close.
Any feedback that you're hearing from traders about kind of this timing? Because I feel like, here we are, Abigail, we've gotten through the bulk of earnings, right? And we're kind of in this, I always feel like a Netherland, if you will. But what are you hearing from traders traders in terms of what they are focusing on right now?
So, such a great question, Carol. So one of the smarter traders that I speak to, he really thought 1.25% was going to bring down some real serious pressure for stocks. That obviously didn't happen. But, sometimes things go farther and longer than you think. So let's call it 140 or 150, which may not be too far around the corner. A lot of times, Carol, these things that we wait for, they don't happen when you expect, and then all of a sudden out of nowhere. So what I do believe is whether it does turn out to be 1.4%, 1.5%, or maybe even 1.75%, where stocks really get pressured, it'll seem to come out of nowhere, and then all of a sudden you're going to have a bearish, story to the downside for stocks on that repricing of risk.
What about when it comes to the energy companies? Because we're talking about this deep freeze. How are investors reacting?
Well, the energy investors, they're loving it. It's very unfortunate that you have 5 million people in Texas and the plains without energy. But for the energy companies, they're expecting that, maybe some of this flows to the bottom line. You have some refiners off the grid right now. Oil above $60 for a barrel for the first time, I believe, since 2018. Natural gas soaring. So again, potentially this is good for those energy companies. That sector, again, up more than 20% this year alone.
Well, and it's interesting too, right? Because Abigail, energy, I think, was your worst performing major industry group in the S&P 500 last year. Just really beaten down. And here we are, as you said, this reflation trade putting it to the top.
Love it, Carol. You're right on it there, because it's that catch-up trade. A lot of times you see the worst sectors of one year, the best sectors of the following year, and that's exactly the case. Energy at one point last year, I think it was down 75%. At the end of the year, I can't remember how much it was down, but double digits. Let's call it 20, 30, 40%. And now, really trying to recover ground on that. Folks want in on that play. Plus, some of these companies restoring the dividends, so they're all in.
Yeah, exactly.
Okay, we can't let you go without talking Bitcoin. 50K for the first time ever today. What's going on?
Well, that's a big round number, psychological number. Technically, I don't think that it means all that much. But when, on this speculative asset, that is starting to get some more mainstream validation in terms of Tesla. Last week, also some of the banks saying that they're going to look at it in terms of payment. These stocks really absolutely on fire. Riot blockchain right now, I'm looking at it, up 20.4%. And if I do a really quick on the year, how much is it going to be up on the year? Probably 75, 80%. 250% in 6 weeks.
Those are real numbers. Those are big numbers.
Those are big numbers.
To say the least. All right, we got to run. Hey, thank you so much, Abigail Doolittle, Bloomberg News Markets reporter, and also crossing the Bloomberg Western Alliance to buy AmeriHome for $1 billion in cash. Stock of the day with Dave Wilson. Dave, what do you got?
PavMed, Carol. It's a maker of specialized medical devices. The company was founded in 2014 and went public in 2016. The ticker is PAVM. PavMed shares peaked just after trading began and then plunged 95% through late 2019 when they fell below $1 each. They rose last year by 77%, and this year they've more than doubled. Much of the gain occurred today after PavMed disclosed the first U.S. use of its product for treating carpal tunnel syndrome, an ailment affecting people's hands and arms. PavMed's device, called the CarpX, won U.S. approval last April. It was meant to be used in a doctor's office for a minimally invasive procedure with a shorter recovery period than other forms of treatment. PavMed said a physician in the Philadelphia area used the CarpX in treating a truck driver, and that patient returned to work within a week. The results sent PavMed shares to their highest price since October 2017. They closed with a gain of more than 28%.
Voila. That's what I say. That's a big move, Dave.
Still $4 and change. But
I know.
28% is nothing to sneeze at.
Right. It's a good perspective. Dave Wilson, thank you so much. Have a good and safe night. You're heading out.
I'm heading out.
Stay warm. Good, safe.
Thank you. I'll see you tomorrow.
Okay. See you tomorrow. It'll be Wednesday. We'll be halfway through the week. Let's get over to World and National News. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Biden is taking his pitch for a new coronavirus spending bill to Milwaukee, where he'll be holding a town hall tonight hosted by CNN. White House Press Secretary Jen Psaki says the vast majority of the American people are in favor of his nearly $2 trillion package.
The president is going to continue working on getting the American Rescue Plan passed. That is his top priority.
The House is aiming to vote February 26th on Biden's plan as the clock ticks toward the expiration of aid on March 14th. In choosing Wisconsin for his first main trip, Biden picked one of the most politically divided states to test his pitch that he has the ability to bring the country together. Well, extreme cold and wintry weather is blanketing areas of the Midwest and South this week. In Texas, millions are without power due to below freezing temperatures. Mayor Sylvester Turner of Houston says more than 1 million are without power in his city today.
It's been a very difficult period, and it's even more difficult when you can't tell people specifically how much longer will they be without power, when can they expect the power to be restored.
Turner says he hopes about 400,000 residents will see their power restored today. Well, air travel really took a big hit in 2020, according to the latest numbers from the Transportation Department. Officials there say airline passenger traffic fell more than 60% last year, the lowest numbers since 1984. At least two major airlines, American and United, say they'll furlough a combined 27,000 workers when relief dollars run out next month. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, and joining me right now is Charlie Pellet. And this story is by Dow Jones, Charlie, and it talks about bulk condo buyers descending on Manhattan looking for cut rate deals. Listen, we keep talking about, you and I, in particular, about the real estate market here in New York City. There are some great deals. People are moving around because they can kind of trade up, get bigger space for maybe the same amount of money that they're spending now.
Exactly. I mean, these guys are buying apartments, co-ops, condos, the same way that you would go in and make purchases at Lululemon. All of a sudden, I'll take 5 of those, 3 of those. And the funny thing is, Carol, I don't know about you, before I read this story, I hadn't heard about this idea of bulk buying of apartments. And as I read deeper into the story, there's a good reason why you and I, or maybe at least why I haven't heard of this kind of purchase. And that's because, for the most part, it is confidential.
It is confidential. I don't think I had known that either, to be quite honest. And it says developers under financial strain are the most likely to entertain bulk deals. But in a choppy market, and again, this is Dow Jones reporting, in a choppy market where many apartments have gone unsold for long periods, many more are starting to consider the idea.
Yeah, and the whole idea here is that you get somebody who goes in and, says, I'll take between 3 and 100 apartments, getting a great deal, and then they've got a choice. Choice A is to go ahead and rent it out until the market improves, or basically choice B is to flip it and try to sell it at a higher profit because they bought one at a low price as part of a bulk sale, and they're hoping that they can go ahead and turn it around and sell it for a profit.
Well, and it sounds like banks are, also a component to all of this, right? Because, you've got a developer who's got properties. You don't necessarily want it, certainly as a bank, for it to foreclose. So do you allow more sales to bulk buyers, right? To at least keep the kind of properties alive, if you will, Charlie. And I guess, difficult times, challenging times leads to innovation and also creativity in terms of how to deal with it all.
Exactly. Never thought I would hear the phrase bulking up come to the real estate market.
Oh my gosh, stick around and we get to hear it all. All right, Charlie, thank you so much. You're listening to Bloomberg Business Week right here on Bloomberg Radio. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Just getting word that Warren Buffett's Berkshire Hathaway cut its Apple holding in the last few months of the year, ending 2020 with a $120 billion investment in the iPhone maker. That according to a filing, a 13F filing today from Berkshire Hathaway. Bond yields surged to the highest in a year, looking at 1.30% right now on the 10-year. U.S. stocks, little change today for the S&P, a record for the Dow, a retreat for NASDAQ, as optimism over the economic recovery continued to ripple through markets. Indeed, for much of the day, we did have both the S&P and NASDAQ trading at records. Here's where we finished. S&P down 2 points to 39.32, close to a record, down 0.1%. The Dow Jones Industrial Average up 64, up 0.2%. NASDAQ up down 47 for the NASDAQ Composite Index, a drop of 0.3%. 10-year down 28.30 seconds. 10-year yield 1.30%. Gold down 1.3%. 17.94 the ounce. West Texas Intermediate crude up 1.1%. 60.11 for a barrel of WTI. Natural gas surging today by 6.9%. 3.11 per million BTUs. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. You're listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. And joining me right now is Wall Street reporter Sonali Basak. And your story is the second most read on the Bloomberg in the past 8 hours. Has to do with Ken Moelis. And we'll get into what he said, but remind everybody who he is. Well known on Wall Street.
Yes, well known on Wall Street. Billionaire. He had founded his own investment bank called Moelis & Company. It advises on mergers, acquisitions, restructuring. So if you're in a troubled spot as a company, you call Ken and his bankers and they'll help you not get into bankruptcy or navigate bankruptcy.
So what did you want to find out from him?
So he started his career at Drexel Burnham Lambert, which is known to have really created, right, the junk bond market. And so Ken, a lot of people don't know this, but he's very wise when it comes to debt. And at Moelis & Company, he insists on not taking on too much debt, not being over-levered so that they have flexibility at a hard time. So what he's doing now is saying, wait a minute, there's a lot of leverage in the system, and there might be leverage in places we don't know about, and people should be careful when things get tough, as they may again.
What did he think about the environment? Because I think it's such an interesting one, right? We're still waiting for more stimulus. There are a lot of people who are still struggling. There are a lot of people out of work, and yet you have Bitcoin, above 50,000. You have a stock market, maybe not today, but repeatedly taking out records, and other asset classes doing well.
Yeah, and when I asked him about the bubble concerns, he was saying, for the better part of his 4-decade career, he's been worried about bubbles, but that's why he talked about borrowing money. It's not just that buying into these assets is a problem. If you use borrowed money to buy into these assets, that's when you get burned.
All right, check out this sound from him.
It'll all come down to leverage. It always does. And I would just discourage people from taking on that marginal bit of risk on leverage. Time is your friend here, and leverage is your enemy, and because leverage is uncontrollable.
Okay, that was Ken Moelis, Moelis & Co., founder, chairman, and CEO, speaking to you earlier. So he's like, as you said, sounding the alarm.
Listen, interest rates are so cheap, right? And when you have interest rates this low, people are going to borrow money. Retail investors are borrowing money to play in the stock market, right? You have companies that are more levered than they have been in any time in history. And what he's saying is, okay, well, if the economy doesn't rebound enough that people can make up those cash flows, then that's a problem too.
Right.
Meanwhile, what I've been watching, Carol, is hedge funds. Are hedge funds taking on too much borrowing in order to really prop up these stock markets, play in these stock markets? It's really hard to know, and there's not a lot of eyes on it anymore.
Right, we might not know until it's a problem, right?
Exactly.
Well, and so what was your net takeaway from Moelis in terms of our environment right now and kind of where we go from here? He's obviously finding opportunities, right?
Yeah, he's finding opportunities, and that's one of the things he says, that when the big banks step back because they are levered and they don't have that flexibility, they have to take up risk, he's going to step in. So, but that's in different ways, right? You can raise money in ways that are not raising debt. He's actually playing in the SPAC market.
Oh, interesting.
Which we are also, as you know, worried about a bubble.
Well, it's funny that you bring that up, because one of the things that really stood out for me today, Sonali, was the one SPAC, was it which is the one, Fertitas, his SPAC. Like, it's just interesting. I think that we're going to start to see maybe some separation out of SPACs that make sense with a clear strategy and buying up properties. And I'm not saying that this is the case with him, but we're starting to see, I think, ones where it's not going to work, and we'll start to see that fallout.
That's absolutely right. And remember, someone like Ken Moelis has his own investment bank. He has hundreds of bankers to deploy to find money to put to work for a SPAC.
Right.
But most people don't just have a bunch of bankers on hand to find them a SPAC deal.
Well, does he have a clear strategy with it, or just opportunities?
So his strategy is new emerging technology. So he recently invested in an electric flying taxi company. And
we've talked about them on air. They say they're coming.
They say they're coming, and I think the point here is new economy. It's, future of cities. Take a little risk in the tech industry. I think he believes in that. But, guess what? It's him and everybody else, right? So it's really not just finding those opportunities, it's finding it at the right price.
Well, that's what I was going to say to you. I feel like at some point it's a lot of money chasing similar ideas, and you have to be careful not to overpay, especially when you're talking about a speculative bet.
And that's exactly right. How do SPACs work? They do an acquisition, and then investors hope that that turns out well.
Right.
But this Tillman Fertitta SPAC you were talking about, that's a perfect example of an acquisition made by great financial minds, right? I mean, and Richard Handler, who's the CEO of Jefferies, was involved in that one as well. Again, huge investment bank. Even with people with a lot of resources, it doesn't mean the business will turn out well.
I feel like we're so lucky that we have you here, because we just highlighted in while you were talking on Bloomberg TV, Goldman Sachs and their new venture or their latest announcement. What was your takeaway from that? We've just got about 40 seconds. This also was among the most read on the Bloomberg today about Goldman's new investment platform.
People are trying to get the average American into the stock market. They're all doing it in different ways. Goldman's way is through ETFs, not yet through individual stocks.
Which is kind of interesting. But I do feel like, I don't know, is it once again the decade of the individual investors? Everybody is kind of offering up a lot more platforms.
And it's big money for Wall Street.
And it's big money for Wall Street, where it all comes down to. Shonali, great stuff. Really appreciate it. Bloomberg News, Wall Street reporter Shonali Bossack. Check out her stories on the Bloomberg terminal, as I mentioned, among the most read. And you can also hear that whole Ken Moelis interview. Watch it as well. That too can be found at Bloomberg.com. All right, coming up, folks, we're going to talk with the author of a new book. It's called 6 New Rules of Business, Creating Real Value in a Changing World. We're going to check in with Judy Samuelson over at the Aspen Institute. That's coming up on Bloomberg Business Week. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So you are listening to Bloomberg Business Week. Coming up, we're going to check in with Judy Samuelson. She's got a new book out. She's VP over at the Aspen Institute. She's got a book out called 6 New Rules of Business. We'll get into that in just a moment. Right now, though, back to your top business stories and another check in with Charlie Pellet. Hey, Charlie.
Well, hello there. Lots going on after the bell. Western Alliance Bank Corporation buying mortgage company AmeriHome for about $1 billion in cash as the pandemic housing boom in the U.S. fuels industry consolidation. Occidental will be releasing results after the close of trading on February 22nd. That'll be next week. Occidental, meanwhile, declaring a force majeure as cold shuts in Permian oil. AIG out with earnings. American International was stung by catastrophes, including the coronavirus pandemic and volatility tied to derivatives in the fourth quarter, even as the insurer was able to post further improvements in a key underwriting metric for property and casualty coverage. Shares down now by 0.5%. Bond yields surged to the highest in a year. U.S. stocks climbing to records, at least the Dow at a record today, as optimism over the economic recovery continued to ripple through markets. Benchmark 10-year yield now 1.30%. S&P down 2 points, little change, close to a record, down by less than 0.1%. The Dow up 64, up 0.2. NASDAQ down 47, a drop of 0.3%. Spot gold down 1.3%, $17.94 the ounce. West Texas Intermediate crude up 1.1%, $60.11 a barrel. Natural gas up 6.9%, $3.11 per million BTUs. The House is aiming to vote February 26 on President Biden's $1.9 trillion stimulus plan as Democrats pivot quickly to their top priorities after former President Trump's impeachment trial ended in acquittal. Austin Goolsbee is a professor at the Chicago Booth School of Business and a former chair of the Council of Economic Advisors in the Obama administration. And on Bloomberg Television and Radio this morning, he talked about the need to get stimulus done.
We have multiple times seen on both the health side and the economic side that wait and see, as I say, is just preparing to fail, because by the time you see it, like the sunburn, it's too late to put the sunscreen on.
Citigroup lost a legal battle to recover $500 million it sent to Revlon lenders after the embarrassing blunder forced it to answer to regulators and tighten its internal controls. Citigroup shares up today by 0.8%. Recapping, S&P down 2 points, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, the rules of business feel like they got a jolt back in the summer of 2019 when the Business Roundtable came out and they announced a new statement on the purpose of a corporation. And it was really about companies operating for the benefit of all stakeholders: customers, employees, suppliers, communities, and shareholders. So we've heard a lot about this over the last couple of years. We've had big name investors like Larry Fink of BlackRock weighing in as well. So addressing the changing rules of business, it's all in a new book. It's by Judy Samuelson. She is Vice President, Founder, and Executive Director of the Aspen Institute Business and Society Program. Her book, 6 New Rules of Business, Creating Real Value in a Changing World. And she joins us on the phone in New York City. Judy, nice to have you here on Bloomberg. Tell me about the premise of your book and what you initially set out to do.
Sure. Thanks for having me.
Sure.
It starts with the premise that business is simply maybe the most important, certainly the most influential institution of our day. And we need it at the table to address any problems of consequence, and particularly these complicated long-term changes that need to take place. So start with that premise, and then just that, the context and expectations of business are changing fairly rapidly. We've seen this happen during COVID time, but certainly before as well. And that business needs to understand this changing context and maybe work with the forces that are shaping the context.
Well, and what's interesting too, you use real life examples to spell this all out, and you had case studies, and which I always love, and I think about our audience, love specifics and love anecdotes. So give me one, case study, and what is the lesson that we learned out of it?
The one that comes to mind, because you started out talking about the Business Roundtable having, changed up the definition of the corporation, is I go back to the time that Roy Vagelos was the CEO of Merck and was engaged in the decision to whether or not to produce a drug that had no commercial value. But it was a cure for a devastating disease called river blindness. It's found in river valleys in Africa and beyond. And he had to make the decision about whether to go forward. And he understood, he was a scientist, he understood that the real purpose of Merck required their ability to unleash this scientific talent. They wanted to be of use to society. It was in their DNA. And that if they refused to put forward a drug, that was essentially telling these scientists, sorry, you didn't get it right. Next time find something that would be more popular in the United States of America. It wouldn't have spoken to the reason people choose to work for a great company like Merck. So it's just kind of a tangible example to me of real purpose, of clarity of what that purpose is, and understanding what has to be true to honor that purpose.
Well, is it difficult, though, to do that clearly, especially if you're a publicly held company, and at the end of the day, you're going to have members of the business media like myself saying, oh, well, that stock's down 9% because they didn't make their numbers, which is something I'm often critical of myself. But you know what I'm saying.
Yes, I do. And it's a reality of the world we live in. So, business people don't get up out of work people don't join companies in order to make the shareholders happy. It's not the lifeblood of why most people go to work in the morning. And I think increasingly business executives and leaders understand this. What the Business Roundtable was essentially saying, which has always been true, is that there is no single objective function. Yes, you have to care about your shareholders or they'll get really noisy. But to manage the business well and to build a business that you're proud to work in requires being attuned to a host of different inputs and kind of consequences of business decisions. And these things are increasingly noisy because of the power of the internet, because of the voice of employees becoming a more important piece of the puzzle. And you simply have to manage to multiple objectives. That doesn't mean it's all the same for every single company. Mm-hmm. Every company is different. And what has to be true for them to succeed over the long haul may be different than even for a competitor.
Hey, Judy, sit tight for a second. We're going to do a little bit of news, but I want to come back, and I'm curious how the pandemic maybe influenced you at all in terms of maybe finishing up the book or how it applies to these rules. And I want to go through some of the rules. I know there are 6 of them, and we'll try and go through as many as we can. We're going to come back to Judy Samuelson, Vice President over the Aspen Institute. Her new book that is out, it's called 6 New Rules of Business, Creating Real Value in a Changing World, and really relevant if you think about all of the things that we've had to deal with as a society and a world in the last 12 months. All right, we'll get back to her in just a moment. Right now, though, back to D.C. and a check on world and national news with Nancy Lyons. Hey, Nance.
Hey there, Carol. The Democratic chair of the House Homeland Security Committee, Benny Thompson, is filing a lawsuit against Donald Trump for inciting the deadly insurrection at the U.S. Capitol. And the attorney for Thompson, Joe Sellers, says Trump, his attorney Rudy Giuliani, as well as the Proud Boys and Oath Keepers also tried to interfere with the election.
They collectively moved to take over the Capitol and attempt to slow down or stop the Congress from ratifying the election results.
The lawsuit is part of an expected wave of litigation over the January 6th riot, and it is believed to be the first one filed by a member of Congress. It seeks the unspecified punitive and compensatory damages. Well, the White House says states can expect a slight boost in coronavirus vaccine supply as manufacturers continue to scale up production. White House Press Secretary Jen Psaki with the good news.
We're increasing the vaccine supply to 13.5 million doses per week that will go out to states.
She says that's a 57% increase since Joe Biden's inauguration. Well, some good news for coffee drinkers. 3 new heart studies, including the well-known Framingham Heart Study, show that drinking more caffeinated coffee can actually reduce the risk of heart failure. Researchers studied more than 21,000 people over a 10-year period, and they found those who drank at least 1 cup of coffee a day decreased their heart failure risk by 5 to 12% per cup of coffee. Heart experts say they're not ready to recommend drinking more coffee to improve heart health, but they do suggest losing weight and giving up smoking to reduce heart disease. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. And I'm Carol Masser, and joining me right now is Bloomberg News' Charlie Pellet. And Charlie, this story has popped up in social media and on people's radar. Apparently, you can get Fauci'd as an Anthony Fauci. I did not know it was a thing.
Yeah, well, the expression I heard referring to the inoculation was a Fauci ouchie. I don't know if you heard that one there. Yeah, exactly. But that's, just all in terms of how you actually get the shot. But New York Post story says if you get dumped in the next few months, you may need to ask yourself, did I get Fauci'd? And I'll leave it up to you to explain.
You're afraid to touch this.
Well, no, I'm just reading with fascination, only because, I'm a married guy, and this is not a world that I'm exactly familiar with.
Well, I'm a married woman. I'm not familiar with this, but I think this is really fascinating. It's a new dating trend, according to the New York Post, called Fauciing, or declining to date someone if they don't appear to take the novel virus seriously enough, has begun apparently making waves on the internet. The term and its definition coined by dating app Plenty of Fish, which included Fauciing in its annual list of the top dating trends to expect in the new year.
Yeah, it makes total sense. I mean, we all have things on our list, and whether it's somebody who is a non-smoker or somebody who is fit or not fit, everybody has things on their particular list. And, I could not imagine ever dating anybody who didn't take wearing a mask absolutely seriously. It's just, it just speaks volumes about that person's, state of mind.
It's like for me, if you didn't like dogs, you were out. No, you had to like pets. You had to like dogs in particular. I'm just going to say, though, the list released in November also warns singles to watch out for masquerading, where a potential partner only pretends to care about wearing masks, and COVID-19 for the sole purpose of dating you, and apocalypsing, where you treat every relationship like it's your last and you get too serious too soon.
It is unbelievable. It's a different world out there.
Oh my God, this too will pass, everyone, just like COVID will ultimately. All right, Charlie Pellet, thank you so much.
My pleasure.
You're listening to Bloomberg Business Week, and this is Bloomberg Radio. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
A record for the Dow, a retreat for the S&P and NASDAQ from Bloomberg World Headquarters. I'm Charlie Pellet. Stocks gained, the Dow gained on optimism over the economic recovery, continuing to ripple through markets. The yield on the benchmark 10-year Treasury note increased as much as 9 basis points to 1.30%, highest since February of 2020. The S&P, NASDAQ, Dow all set records today before easing from those highs. S&P down 2 points, down less than 0.1%. The Dow up 64, up 0.2%. NASDAQ down 47, a drop there of 0.3%. Spot gold $17.94 the ounce, down 1.3%. West Texas Intermediate crude up 1%, $60.07 a barrel, and natural gas today up 6.5%, $3.10 per million BTUs. Recapping S&P down 2 points, a drop now of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest. We're talking with Judy Samuelson. She is Vice President, Founder, and Executive Director of the Aspen Institute Business and Society Program, and her book out is called 6 New Rules of Business, Creating the Real Value in a Changing World. And she's still with us on the phone in New York City. So I want to go through the rules, Judy, but I want to ask you, the pandemic, how did that impact any of your writing for this book?
Wow, it certainly slammed right in the middle of the book.
Yeah.
I think one kind of download from the pandemic is just that it's humanized the corporation to some degree. All of the conversation about the health of frontline workers and the risks they were taking and whether or not they were being adequately rewarded, and companies playing with CEOs' pay in this moment, et cetera. It kind of put a human face on companies that we don't necessarily go deep into all the time. And that relates to some of the underlying tensions and changes and forces that are shaping business today.
And they stay there? Do you think they're lasting?
The whole game is about whether companies are taking seriously the process of aligning their operations and their decision-making with their intentions. We have had no shortage of CEOs speaking out in the last years, not just during the pandemic, but going back into the early years of the Trump administration and even before that, speaking to complicated issues around immigration, around the right to own to bring a gun into a store or not. These social issues that don't always rebound to the business environment, but where CEOs increasingly have been kind of having to mirror what they're hearing from their own employees. And I don't think that's going to change, but it's still a complicated endeavor to set intentions or speak to the complexity of these questions and then make sure that you're actually scrubbing your operations and kind of rules of decision-making to make sure that they're aligned with those intentions. That's complicated.
It is complicated. I agree. And, I was having a conversation with someone about how racism has really come to the forefront. And this individual said, in some ways we have President Trump to thank that it really brought this conversation out, that to have, a president that had very extreme views about things and others who had very extreme views about racism, that it really, created a very strong conversation to some extent. That's kind of controversial, but you do wonder, and what this individual is saying to me is that as things start to get quieter and more normal in terms of the political environment, does our enthusiasm for change also kind of die down?
I think that it has pointed out domains where the companies have real agency. Executives have real decision-making power that deeply influence the kind of conduct and the well-being of employees. Certainly, they have real decisions that make that either kind of stick with the status quo and fail to kind of review our assumptions, or mine these moments and try to figure out where in the company, where are the ways in which we can actually influence racism authentically from inside the enterprise. And I think that conversation is ongoing. And then back to employees again. I don't think employees are going to let business off the hook I think they are a natural bridge between the inside world of the enterprise and the community that's the hosts the enterprise. And they are both the risk. They are both keen to understand and to communicate the risks that they see for the business, but also the opportunities that are possible if a business does align with their real values.
Yeah, I do think you're onto something, and I feel like we've had a lot of conversations about that the future worker, the younger worker, probably younger today, and then who will be that employee for years to come is certainly being an agent for change at companies because they're demanding it or they're going to go work somewhere else. And the same thing for consumers. I see it in my own daughter. Hey, listen, I'm just going to mention some of these 6 rules that you lay out. You talk about co-create, don't compete. Culture is king. Employers are more than stakeholders. They are the business. Corporate responsibility is more than your carbon footprint. Climate change, that's a big one. And I think it's really relevant and important today on a day when we're seeing many states around the country that are either without power or dealing with rolling blackouts because of climate change.
Yes. And it's also one where we've seen some businesses step up and raise the bar, and we've seen other companies kind of join them in the fray. So I think that's a dynamic one, obviously, with a new administration that has a very different mindset about the need to address this problem. Business can be aligned with that direction as well and not be working at odds, but be working along with government.
What do you think is the most different among the 6 rules that you've laid out? Which is the most difficult right now?
Most difficult? Well, I do think that the degree to which capital markets is still in the thrall of shareholder primacy is kind of a simple way to measure, and one that from which they benefit tremendously if they're right. I think that's still a conundrum. I think we hear the intentions of business, but their CEO pay is anchored for the large public companies. Their stock price is the center of their pay package, and so they're internally conflicted about these trade-offs where, I'm sorry, it's 90%, 95% of profits have been sent to shareholders over the last decade. That's going to have to change if we're going to enable a kind of a shared economy here where everyone benefits, and that ultimately has to be the long game if business is going to succeed. You can't have a successful business in a failed society.
Which is a really great point to leave on, and I agree that in terms of dealing with some of the gaps that are out there in society, that's the way we need to do it. Judy, thank you so much. Really thoughtful. Judy Samuelson, Vice President at the Aspen Institute. Check out our book, 6 New Rules of Business, Creating Real Value in a Changing World. And yes, our world continues to change. Some headlines crossing the Bloomberg terminal. President Trump putting out a statement blaming Mitch McConnell for Republicans losing the Senate. I also saw something go across on Twitter that Steve Bannon wanting President Trump to run for Congress in 2022 and replace Nancy Pelosi as Speaker. This is from Newsweek. Let's bring in our Kevin Cirilli, who covers Washington, covers the White House. Sound On is coming up in just about 5 minutes here on Bloomberg Radio. Wow, where are you going to start today?
Well, I think we're going to have to start with this breaking statement. I'm old enough to remember when we used to get the tweets in real time, but now we're getting these old school statements because, of course, the former president has been removed from Twitter. He goes on in this about 1-page statement. He writes, quote, "My only regret is that McConnell begged for my strong support and endorsement before the great people of Kentucky in the 2020 election, and I gave it to him," end quote. Brutal.
Talk about a tortured relationship.
It's very complex, but as an Irish Italian Catholic, I sort of understand it. It's St. Patrick's Day season, right? Mardi Gras time.
It's coming down to that. Man, listen, you got to love it. It gives you lots of things to talk about, Kevin.
Exactly. Thanks, Carol.
All right, looking forward to it. The host of Sound On Bloomberg Radio, Kevin Cirilli, that is coming up next right here on Bloomberg Radio. For the whole Bloomberg Business Week team, have a safe evening, a good evening, and we're thinking about all of you who are dealing with power issues across the country. This is Bloomberg.
that